This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, and Michael Barr. We get started. It's a 4-day work week. We're off Wednesday.
Yes, we're off Wednesday.
We're going from 4-day to 4-day. I like this trend. Maybe it's a good trend for the summer. The trend right now, let's start with it. The weather, the Washington Post, with a killer wrap-up of what the next 6 days look like. Paul, this isn't funny.
What's interesting for June, we're going to get a little warm here. It's actually on the Jersey Shore. It's been a little chilly with the onshore breeze, but it's getting warm this week.
Rapidly. We're going to do the next couple of days. We're going to stay on top of that story, and of course, the economic impact as well. We are advantaged with Rob Carolyn, and he will join us here through the week on this really onerous heat wave. There's many hundreds of millions of people affected. Red and green industry, we get started. Dollar stronger. Englander to join us here in a couple moments. I mean, yen really doesn't move, but I'm sorry, I've got a dollar lift, EM weaker.
Yeah, I'm looking at it. The DXY index kind of right around 105, spot 5. But again, it looks like this Federal Reserve is going to cut rates. I think the market's just trying to figure out is it September or November or maybe
before the Red
something
Sox
further.
Sweep the Yankees.
Yeah, exactly. We had a little splittage there.
Yeah.
So
we got David Rosenberg joining us at my request at the 8 o'clock hour here to parse out inflation. But there's a lot of Fed speakers, Paul. What do they say after that odd press conference?
Yeah.
I mean, I just don't. It's like they've run out of words.
Yeah, and I think they should just stop talking. It's just let's just get to the
Okay,
regular
so Lisa
meetings.
said that about me,
yeah,
but that's
exactly.
a
Let's just get to the regular meetings, the regular press conference. But they all feel the need to be out there. But again, I think the data is suggesting that there's no need for this Federal Reserve to rush here, and that's kind of. But we're going to get a lot more data this week. We're going to get retail sales tomorrow. That'll be a big one, and then we have continuing claims.
Thank you. I did not see that. Yeah, retail sales tomorrow. That'll be important. We're on Apple CarPlay, on Android as well. The Bloomberg Business app, it's free on YouTube. Search and subscribe. Bloomberg Podcasts out on YouTube. We're in the Interactive Brokers studios. Thank you, Interactive Brokers, for your foundational support. Holding up the foundation, our Bloomberg Business Brief, Lisa Mateo.
You got it. Good morning. And futures, well, little movement right now. This is ahead of a very light week with a market holiday Wednesday. Like you said, right now we have NASDAQ futures up just 0.1%. Dow futures down 0.1%. We have S&P futures, little change. Paul said it. Retail sales tops this week agenda. That's tomorrow. This week we'll also see reports on industrial production, housing starts, and home resales. We'll take you over to the bond market. We have the 2-year yield 4.70%. That's little change. The yield on the 10-year 4.24%, and that's up by 1 basis point. Over to commodities, we have spot gold lower, $2,320 an ounce. Brent crude $82 a barrel. WTI crude $78 a barrel. Moving the markets, not much. We have design software maker Autodesk. They're up about 4%. The Wall Street Journal reported activist investor Starboard Value. It's taken a $500 million stake in the company. Now, as far as earnings, pretty light week. We have home builder Lennar. They report after the close today. Right now, their shares down about 0.1%. We'll also hear from Lazy Boy today. They're down about 0.1% as well. Looking further down the road, we'll hear from Kroger Thursday and CarMax on Friday. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Oh, blue button there. The Detroit Lions blue button.
Of course.
As well. Barr insists on that. This is a joy, and we start very strong for Global Wall Street on this Monday with Stephen Englander. He is definitive on cross rates, the nuances of not euro dollar or dollar yen, but mixing it all together. What does Naki Staki actually say is one idea. Stephen Englander, the Standard Chartered Bank, thank you so much for getting us started this morning. What is the character, Steve Englander, of this new strong dollar?
Well, first, it's always a pleasure to join you. It's funny because the themes are emerging from the rest of the world. For, say through the end of May, like 80% of the discussion was the Fed and where interest rates were going, and that's all you had to know. Now the political dimension, both in terms of doing damage to value of currencies and helping the value of currencies, is becoming much more important. And we thought the main show would be the U.S., but it's happening outside of the U.S. Right. And so, yeah, so if South Africa doing very well because of the national unity government, concerns about France and the election and the euro, and that's weighing on the euro and likely to continue.
What do you call on euro right now? Have you amended and adjusted? We did go below 107 at one point. Some say a path to parity, but what is the dynamic, the magnitude, Stephen Englander, that you see for euro move?
Well, we still have it going down to 103, 104. We have to see whether it gets that far. It certainly is vulnerable to the elections. I think that the market would really like to see a government from the center, but if it looks like the French center is going to be decimated unless they really pull it out, it would be either kind of a government led by the, I don't want to call it far left, but pretty reasonably left, or a government led by the right, and the center would be like a tiny part of this.
So, Steve, I guess putting all that together here, I mean, as we think about the U.S. dollar, is there a viable bear case for the dollar here, given the various rate differentials?
I'd say that there's a reasonable but not very high probability in the short-term bear case for the dollar. And it goes like this, that, we had the Michigan confidence numbers yesterday. Households are really pessimistic about where their real purchasing power is going. We saw the employment numbers and the unemployment numbers. They keep going up despite the, influx of immigrants that kind of flatter top line NFP. There's a chance that the consumer, ends up being markedly weaker. Having said that, the signs are that the consumer is getting more sluggish gradually, but it's not falling off a cliff. But that would be the direction. If the dollar really were to fall, we would have to see, really clear consumer weakness that surprises everyone.
So what do you think our Federal Reserve is going to do here, Steve, here in the U.S.? I mean, can it stay pat here through, after the election to figure out what they need to do?
Let me say this. Often when we talk about what the Fed is doing, whether they hike or cut and so on, it looks like if they make a mistake, it's going to be a big, big deal. And I think what the Fed guys are kind of saying is that if we make a mistake, it's not a big deal. So maybe we cut in September, maybe we cut in December. Given the way the economy is shaping up, it's not the end of the world. And I think that that's sort of the message that the market is absorbing. And relative to the rest of the world, it's a very positive dollar message.
Stephen Englander, I got to ask you a nerd question. Paul, can we go Nerd Monday?
Oh, certainly.
You got to have a nerd book on the beach, folks. I mean, Lisa, what were you reading on the beach? I mean,
I was just listening to music.
We won't embarrass us. You're listening to Bruce, right?
Yes,
Bruce
exactly.
and Bon Jovi. Okay,
shore.
Perfect. Steve Englander, I'm reading on the beach, Floating Exchange Rate at 50 by Douglas Irwin of Dartmouth and Maurice Obstfeld of Berkeley. It's just trenchant reading, Stephen Englander. And Adam Posen at the Peterson Institute talks about our currency non-system. Is China advantaged by the non-system that Max Corden used to talk about? Is China advantaged by the floating chaos of the currency system?
Look, their capital markets are opening. They're incompletely opened. And I think that in some ways that might be more important than the degree to which the exchange rate is volatile. I say, if you look across the world, I don't think there's, a single major central bank that says, oh, our currency is a real problem. The dollar is strong, and unusually when the dollar is this strong, we're not seeing, big pressures on manufacturing, big pressures on the trade balance. China, the Chinese trade balance is doing well, but it's not because of the currency. It's because they've shifted all these resources into manufacturing from real estate. So it's a non-system, but it's not the cause of the problems that we have.
Stephen Englander, thank you so much with Standard Chartered Bank. Greatly appreciate it this morning. Paul, out on YouTube, I mean, I can't stand Good Morning from Yucatan.
Really?
I mean, how cool is that? Talk about a heat wave. It's like always very heat wavy there. Guy in Norway is back in Atlanta.
All right.
I mean, and he went to Normandy as well. That's cool. A lot of people talk about it. Few people do.
To Normandy.
This gentleman went to Normandy.
Oh,
for
yeah.
the,
it's on my bucket list. It's on my bucket list. It has to happen soon.
It's very cool.
Yeah.
Good morning, Fred from Montreal. It's great. Fix Canadians when short, I mean, David Rosenberg's medicated over how the Canadians are doing.
I know.
It's painful. Is Barr with us today?
I think he's here today. I mean, he meanders in occasionally. Exactly.
I just put the four of us on a beach together. That's a frightening thought. Yep. I mean, we don't want to go there. Well, Bob, what are you laughing about? I mean, this is Michael Barr. You and I would be up on the deck.
The cocktail.
Yep. Well, or a Schlitz or a Strauss.
We don't have to be on a beach for a cocktail.
Yeah. Oh, that's true. Yeah. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Israeli officials say Prime Minister Benjamin Netanyahu has dissolved his influential war cabinet days after a key partner bolted government. Opposition leader Benny Gantz withdrew from the body over a week ago. It comes as Israel says it is opening up the Kerem Shalom crossing. Today's briefing comes a day after Israeli military announced a tactical pause in an area of southern Gaza Strip to allow the deliveries of humanitarian aid. Coordinator of Government Activities spokesperson Shimon Friedman says it is up to freeing the backlog of humanitarian aid deliveries for desperate Palestinians.
We're opening this route for them where they can move without needing to coordinate every time, and where there will be military presence along the way.
Friedman says the route would increase the flow of aid to other parts of Gaza as well. More than 1,000 have been forced to evacuate, and hundreds of firefighters are trying to control flames near a major highway in Southern California. Firefighters on the scene of the Post fire near Interstate 5 north of Los Angeles say it has already consumed more than 12,000 acres. CAL FIRE spokesperson Jason Clay.
On the Point fire, we're just on the west side of Lake Sonoma. It's been a wind-driven fire that's been aided with low relative humidities, and so kind of driven down towards the south. The northwest winds have really pushed it.
Friedman says the route that the firefighters said that the Post fire the wind is carrying burning embers as far as 3/4 of a mile from the fire line. Senate Majority Leader Chuck Schumer announced that the Senate will vote this week on restoring a ban on bump stock guns just days after the Supreme Court struck down the ban. Schumer slammed the Supreme Court for its ruling.
By undoing this most common sense safety ban on deadly bump stocks, this MAGA Supreme Court has shown the American people how dangerously to the far right they have gone.
Schumer says bump stocks can turn a semi-automatic into almost the equivalent of an automatic weapon like a machine gun. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, over the weekend, some important adjustments by equities sell side.
Yep.
Where people that were, respectfully cautious, I would say they were not bearish, but they were framing out a more cautious path lift. There's no other way to put it. They really reframed out to higher. We're getting above 5,400, 5,500 XPX, and they're catching up with John Stolfus in terms of getting out front.
Yeah, exactly. I mean, I'm looking at the SPX. I'm up, nearly 14% year to date here. It's a lot of that performance was in the first quarter, but we had it, so far so good here in the second quarter.
Busy week ahead from New York City. This is Bloomberg Surveillance.
24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Build America Mutual. Insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of the Building America. Invest in BAM insured bonds. All right, futures. We see red and green on the screen. Investors kind of assessing that political volatility in France, elsewhere. Traders also awaiting policy decisions from major central banks this week. Over the weekend, we had the Fed's Neil Kashkari, who told CBS that the central bank can take its time, watch for incoming data before starting to cut interest rates. So let's get to futures. We have NASDAQ futures up about 0.1%, Dow futures down 0.1%, S&P futures little changed. We have the bond market with the 2-year yield 4.70%, little change. The yield on the 10-year 4.24%, and that's up 1 basis point. We have shares of American Airlines. They're little change right now, but the carrier and its flight attendants union, they're planning another bargaining session for tomorrow. Two sides said to be making some progress in contract talks. They're trying to avoid a strike this summer. We'll see what happens with that. And Bill Gates said he's prepared to put billions of dollars into a nuclear power plant project in Wyoming. TerraPower expects to complete a new reactor in 2030. And Tesla customers who placed their orders for Cybertrucks, well, they're going to have to wait a little bit longer for them. Electric reporting deliveries being held up by a problem with the windshield wiper. Tesla shares are up about 0.1%. There's also a report that the company could be testing out self-driving software in China.
Oh, you're kidding.
That is your Bloomberg Business Flash. Tom and Paul.
Okay, one drove by me the other day. What happens to your car if you or they hit you in a Cybertruck?
I don't know. I'll wait for Matt Miller to tell me, but it's an interesting look. Some of the people like them.
It is. I've seen it. It's head turning for sure, but it looks like it can do some damage if you run into it.
I could see Stephanie Roth in one.
Yes.
Joining us now from Wolfe Research, really one of the most interesting economists out there, Stephanie Roth, and she brings truly prodigious mathematical abilities. You remind me of Loretta Mester retiring into Cleveland Fed. What does your mathiness do when you commit economics? What makes your economics study different because of your, Buckdell and Columbia world-class mathematics?
I mean, these days it's because there's so much seasonality problems in the data. That's been one of the most important things.
So you agree with Anna Wong at Bloomberg that there are data problems?
Oh, there are data problems in a big way. I mean, look at core PCE. In Q4, it averaged 1.5%, and in Q1, it averaged 4.2%. Inflation was neither. We're running somewhere around 2.5% to 3%. So there's just truly seasonality problems that are working their way through, and I think we learned that last week, and that's what markets
is the
reacted to.
seasonality problems, and when you synthesize the math and the revisions, lead you to a greater disinflation?
Yes, and it leads me to believe that the Fed can cut in September.
See how she does that?
Yep.
When you're a math major, you do that. You don't say, yes, Tom. You say, yes, you stupid.
So what is
Save me, Paul.
So Stephanie, is the Fed behind the curve? Do you think should they have been cutting already, given some of the real-time data we see?
I mean, could they have cut in July? Maybe, but the inflation data were bad in Q1, and understandably they want to be convinced. So September, I don't think they're in a rush. September is perfectly fine. I think they probably need to be cutting this year, otherwise we might run into some problems similar to what we saw, a couple years ago with some of the regional banks.
So, I mean, if I look at the interesting thing here for a lot of investors is it feels like that data we got in the first quarter about inflation, that suggests that inflation was still around. Yet we've got a couple prints after that suggest that maybe not. So I guess it's understandable for the Fed to be waiting.
Yeah, it is. And I think, Powell was one of the people who really believed in the seasonals. I think some of the other FOMC members need to be more convinced than perhaps even Powell. But the core PCE number should be something like 0.15 in the next month, and the seasonals go the other way throughout the rest of the year. And OER is a big one. OER, we should see the big next step down in the month of June.
We should explain to our audience that OER is real estate.
Exactly. Real estate CPI, real estate inflation.
Okay, very good. And that's a thing for everybody who's trying to rent an apartment in the city. Retail sales tomorrow. How's the consumer doing? What do you expect to see from retail sales tomorrow?
Yeah, that's going to be a big one because the street is looking for sort of a modest gain. But if you look at some of the alternative data, it looks like it could be running a little bit hotter. Some of the credit card data look a little bit stronger, like you might actually get a bit of a bounce back. If you net out what we've seen for the bulk of this year, it's been a consumer that's spending, but slower than what we saw last year. which is arguably a good thing. I mean, especially good spending was so strong last year, it was kind of unsustainable.
So give me a proportional analysis here. What's your forward view on real GDP, the one everybody follows, but also nominal GDP, real GDP plus the inflation element? What are those two numbers forward?
Yeah, so we're looking for something around a 2% real GDP growth, which is kind of historical average. That's a normal trend-like growth. Solid. And then if you add a 2.2% something inflation like that, then you're looking at a 4.2% nominal GDP growth.
Well, where's the gloom? I mean, all weekend, Sam Rowe out with a spectacular 6 charts from the different street sources showing, I'm sorry, it's a bull market because actually the economy's pretty good.
Yeah.
Stephanie, is that safe to say?
Yeah, the economy's good, and it's been an impressive rebalancing. We were coming from a place where inflation was running at 9%, and it's come down back to something that's very close to what the Fed's looking at. And now we're looking at inflation to several decimal places. We were in a position where who cared?
Is that Bucknell's fault? Where did that come from?
Bison.
I mean, who cared what inflation was to the second decimal when you were seeing 0.6% month-on-month prints? But now that we're talking about something between 0.1 and 0.3, it matters.
No, but you can't. In other times of disinflation, the early 1950s, nobody was looking to 3 decimal points. That's a modern idiocy.
That's fair, and I mean there's so much Fed communication, and there's just all of that has changed a lot over the number of years. But now we're in an environment where it matters.
Paul was at the beach this weekend studying central limit theorem.
Exactly.
Take it over.
Talk to us about this. The labor market here, because I know the Fed's looking at the labor market, and we're pushing up to 4% unemployment, but still a fully employed economy. How do you think about this U.S. labor market?
A lot of it has been driven by immigration, and by that I mean we were coming from a place where the labor market was really tight, and we had a really strong influx of immigration, which is still ongoing, and that helped to rebalance the labor market or add a lot of supply where there wasn't really supply. We don't have that much as strong sort of domestic labor force growth, but now we got it from the outside, and these programs are ongoing until perhaps the next administration, and then it could change a bit.
So on a non-farm payrolls, pick a number. What's the immigration plug there? Give our audience scope and scale. When people toss around the phrase immigration, how much of that's in non-farm payrolls?
Sure. So when you think about the steady state of payrolls growth, forgetting about immigration, we're talking somewhere, there's domestic growth of 85 to 100,000. That's without sort of strong immigration trends. Immigration trends roughly double that.
Double?
Roughly double that. So, for example, the Biden administration humanitarian parole programs, which is bringing in people from Mexico and then Cuba, Haiti, Nicaragua, Venezuela, bringing in 75,000 people per month, and they're able to get a work visa within 30 days. So presumably if they're working.
This is too important. You're telling me we got a run rate non-farm payrolls of 100,000 a month, and you're willing to pop that up to 180 or 200 based on immigration in America?
Yes, that's why this has been
such
a true kind of rebalancing.
Look at this. Torsten Slok, our good friend from Apollo, just out with a note going to the same issue. The foreign-born labor force has grown 11% since February 2020, and the native-born labor force is unchanged over the same period. So the growth in the labor force is entirely driven by immigration. Torsten Slok,
and by the way, that data might not even be fully capturing all of the immigration because they're having trouble, especially in the household survey, which is what captures that, all of that.
Bob, can we slot Stephanie in near Jobs Day and just tell her people she can't be so mathy?
Yes.
Because then it's like emotional. This is great. How do kids get so they love statistics? How do we get back to when we were kids and you had to take statistics at gunpoint? And you did it and nobody complained. You just took it.
Yeah, that's fair. I mean, I think it's kind of fun. You learn a lot from just digging into the data.
That's foundational.
Yeah, it totally is. I mean, especially these days where the data are just so funky in the post-COVID
I sit at the dining room table and start talking 1 over square root of t, and the kids, they throw vegetables at me. Stephanie Roth, thank you so much. She is with Wolfe Research. Truly brilliant. Loretta Mester on steroids there with the mathematics of it. Really important. There are huge comments there on immigration. We'll probably feature those on Single Best Idea today. It's a really interesting Monday. Your advantage. We have a terrific set of guests coming up later. David Rosenberg from Toronto on your disinflation. From New York City, Bloomberg surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures right now. This is as U.S. stock bulls, well, they got even bolder. Goldman boosted its year-end target for the S&P 500 to 5,600. Evercore upped its call to 6,000. Right now, NASDAQ futures up 0.2%. Dow futures down 0.1%. S&P futures are little changed. We have the 2-year yield, 4.71%, little change. The yield on the 10-year, 4.24%. That's up 1 basis point. Commodity spot gold lower, 2,321 an ounce. We have Brent crude $82 a barrel, WTI crude at $78 a barrel. Want to check in with shares of Nvidia, up another 0.5%. Its recent 10-for-1 stock split still keeping that rally going. It's also getting more price target upgrades on Wall Street. And then we have companies making news, companies like Danone, the French yogurt baby formula maker. It's betting on its medical nutrition unit because it's stepping up investment in nutritional drinks for cancer patients and also the elderly. And investor Bill Gross, he auctioned 100 stamps worth about $18 million. Yeah, it's part of his multi-year liquidation of his vast collection of stamps. There you go. That is your Bloomberg Business Flash, Tom and Paul.
I told Bill once, I said, Bill, they ought to make a stamp about you and make it a forever stamp so it was worthless. He was laughing. He has built, this is a guy who literally started out in the mailroom at the Pacific Insurance Company of Newport Beach, in the mailroom, clipping municipal bond coupons, literally. And he built up a stamp collection to die for.
Wow.
And, you know, I don't, you know, it's like charade where Audrey Hepburn figures out there's a stamp in the kiosks in Paris. You have no idea what I'm talking about. This is a joy. This is what we do here at Surveillance. We put guests back to back. We just had in Stephanie Roth of Wolfe, with prodigious mathematical dynamics. In the same school of thought is Neela Richardson, who has a really important job for the American consumer and for our paychecks at the Automatic Data Processing Company of New Jersey, where she is chief economist. And they have Stephanie Roth into Neela Richardson is what this is all about on a Monday. Neela, I'm just going to cut to the chase. You have a vision into the paycheck like no other economist on the planet. What does ADP see right now?
We're seeing that pay growth is indeed slowing, but it's not slowing as fast as it was last year. And if you are a new hire, in fact, if you have changed jobs over the last year, you're still seeing a pay bump that rivals what you saw in January. So we're getting some decline in wages, but it's not a free fall. It's a really slow decline in year-over-year wage growth.
I'm going to ask you a political question to get you in trouble with general counsel at ADP. The immigrants, when Stephanie Roth talks about immigration or you talk about immigration, are those legitimate tax-paying jobs where they're getting a check from someone like ADP?
If ADP sees them, then they are legitimate because we do the compliance, which is very important for every worker and for all of our more than 1 million businesses across the world. But yes, if we see the data, they are getting a tax record. And that's really important too because these jobs and the distribution of workers have changed dramatically over the past 4 years. Immigration is just one change in the overall distribution of the worker that we're seeing in the data.
So, Neela, we just been over the last few weeks seeing college graduations around the country here. What are college graduates doing here in terms of the labor force? Are there opportunities for these kids coming out of college these days? What's that part of the labor market look like?
Yeah, the opportunities are there, but they're not as prolific and they're not as easy to get. And that is a change from the last couple of years. We just put out a story in our quarterly report called Today at Work about software developers. Do you know, Paul, that there are fewer software developers employed now than there were in 2018? Really? So for all those computer science majors who have heard about AI and Gen AI and the future of work, and it's all tech-based, there are fewer software developer jobs.
Do you have a why?
Well, we know a couple of things. It started before the pandemic, so software developer jobs peaked in 2019. We also know that the technology is going to a place where there's a lot of machine learning within it. So it's an industry that's been transformed. If you look at the tech sector, even last year, you saw headline layoffs. If you look at the information sector, you see declines in pay that are stronger than the overall market. So I think this is a industry and occupation in transition. There are other occupations in transition, something we're watching, but it's interesting.
You know, a lot of folks just in the last several years, I've heard more discussion of, you don't have to go to college. You don't have to take on all that debt that's associated with college. You can go to a trade school because there's so much demand for those types of people, and the pay is very good. Are you seeing that in your numbers? How are you seeing that?
Well, we're looking in that closely because we want to know what Gen Z is doing. There are gaps.
Who's Gen Z? Is that Lisa Mateo?
Yeah, I forget. Thank you, Paul.
She looks like she's Gen Z.
Thank you.
Ken Fellio, our global technical director, Gen Z.
I don't think so.
I think it's 2010 is the end date for Gen Z.
You say so.
Well, my 16-year-old said so.
How are the trade schools doing?
This question.
Paul's got a good. That's a really good question.
Trade schools, I'm not sure, but trade gaps are very apparent, and it's been that way for a long time. So you're talking about your plumbers, electricians, anyone who's done any home remodeling over the past 5
they're all making
years
$800 an hour.
Yeah.
I mean, it's amazing.
Don't need a plumber urgently because you're going to see how much the pay gaps matter. And when we look at the data, we're seeing that there's an aging in this demographic, and that's important because new people aren't coming in at the same rate that older workers are retiring. Why? Well, I don't think the message has been broadly disseminated across young people. We are in an economy where you don't make stuff. You're digitized. I mean, my kids want to be an influencer when they grow up. I mean, that's the world we're living in.
Mateo.
So the idea of learning a trade, of doing something with your hands.
Like a real job is,
Yeah, it's not
we
as
had this
popular.
conversation this weekend at the dining room
Think
table.
about this. You get to set your own wages. You get to work for yourself. You get to set your own hours. You have a skill that is interest rate not cyclical. People will always need a plumber.
YouTube's lighting up like a candle with this discussion.
So there is something to it, for sure. The economy needs it.
Neela, Paul saved me mentioning retail sales tomorrow. What is the nature of a polarity in retail sales? What does ADP see in terms of the haves retail sales versus the have-nots retail sales?
So every question you ask me, just full disclosure, Tom, is going to circle back to the labor market and what we're seeing in the data, because we just put out, again, research showing that there's a widening disparity between top high-end wage earners at the top 25% of the income distribution and the lowest paid workers at the bottom 25%. And that gap has widened 5 percentage points over the past 4 years. What does that mean for retail sales? What we're seeing is that firms are raising prices. One reason for that is because of the pay growth that they're seeing at the low end of the pay distribution, which has been very fast, double digits. But it's really the high earners who have benefited more from the wage increases. The dollar amount is much higher at the high end, causing that spending to be very resilient. So you have the combination of which higher firm prices and more spending, which has kept inflation higher for longer. Now we go into this retail cycle where bad vibes might be lowering consumer spending overall. So on net, I do think that retail spending is a bit stronger than it was last month because of those high wage earners who still have a little discretionary spending in their budgets.
You've done so much in giving back to the community. Tell me about the Committee of the National Statistics and Committee on Automation in the U.S. Workforce. Are we all going to be replaced by robots?
No. Soft skills are going to matter more. So let's all remember how to do them.
Yes.
Soft skills don't change, and soft skills are needed when you have an aging demographic. That's going to be an important sector to watch. But I think it's important to get data right. wherever you're looking at data, and private sector data has grown in prominence. It's better recorded and managed than it was, let's say, a decade ago. And there are some large firms who have a very important viewpoint on where this economy is heading. And when you're looking in the context of a data-dependent Fed, data matters, and it matters that we get it right, whether it's coming from public or private sources.
Paul, get one more in here.
Wage growth, is it uniform throughout the economy, or are some of the folks at the lower end of the pay scale not getting that benefit? Because we hear a lot of concerns, rightfully so, about inflation really hitting some of those folks.
What we've seen is that at the bottom end, wage growth has been the highest. So we've seen double-digit pay growth.
Highest, okay.
But it's highest because the pay was so low to begin with.
Okay.
So you're talking about maybe $3,000 a year for the lowest paid workers in terms of pay growth. That $3,000 may not add up to filling the tank after taxes, after all the deductions, filling the tank, filling the grocery cart, paying the mortgage, paying the rent. So they're not doing as well as that pay growth would imply. And that's the important factor. That's why people don't feel wealthy even though they've seen pay growth.
Neela Richardson, thank you so much for automatic data processing, ADP, their chief economist. Really interesting. Just to have Stephanie Roth and Neela Richardson back to back is what it's about on a Monday to get framed up here for the week. The frame up here, what a shock. The NASDAQ's green.
Sure, why not?
I mean, why not?
Let's go.
I mean, one of them's red.
Yep.
You know, it's amazing.
I'm buying tech.
You even closed green on Friday. Red and green on the screen right now. The VIX 13.05. A little bit of tension in the weekend. In the 10 o'clock hour, Alex Steele and Paul Sweeney will explain BitDog down $5,000, 65,000 handle on Bitcoin. What happened?
I don't know. Maybe we'll get Matt Miller for a guest spot.
There it is. The 10-year real yield, 2.05%. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, Israeli officials said today that Prime Minister Benjamin Netanyahu has dissolved the influential war cabinet that was tasked with steering the war in Gaza. The war cabinet was dissolved following the departure of Benny Gantz, an opposition lawmaker who had joined the coalition in the early days of the war. The Israeli military says it is pausing fighting during daytime hours along a route in southern Gaza to free up a backlog of humanitarian aid deliveries for desperate Palestinians. The Army says the daily pause from 8 a.m. to 7 p.m. will continue until further notice. It should allow aid trucks to reach the Israel-controlled Kerem Shalom crossing. IDF spokesperson Daniel Hagari said the blame lies with Hamas for the reduced flow, accusing them of looting.
How do we distribute the food without Hamas in the game, taking the food, looting the food, using the food for his military operatives?
The United Nations says it welcomes the move, but adds that so far no aid has left Kerem Shalom. Senate Majority Leader Chuck Schumer says he'll bring a vote to ban bump stocks this week. Bloomberg's Ed Baxter has more.
This just days after the Supreme Court invalidated a federal rule that outlawed the devices.
By undoing this most common sense safety ban on deadly bump stocks, this MAGA Supreme Court has shown the American people how dangerously to the far right they have gone.
And says there is no need for them.
It makes it from a regular weapon, a semi-automatic, into almost the equivalent of an automatic weapon, machine gun-like.
He says he will call for unanimous consent. Ed Baxter, Bloomberg Radio.
A week and a half before the first presidential debate, former President Donald Trump meets today with the House Speaker, Mike Johnson, at Trump's resort in Mar-a-Lago. Congressional Republicans are looking at how to hold on to the slim majority they have in the House. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Okay, let's talk about this. A 4-foot putt's a 4-foot putt.
Yeah.
I mean, even a clown like me could make a 4-foot putt. What happened?
I don't know. A couple missed putts in the last 3 holes.
This is like Caddyshack where, you know, the guy's on the edge of the putting.
Yeah, this one's going to stick with Rory McIlroy for a long time. But Bryson DeChambeau played a phenomenal tournament, had a great week, just ripping a ball all over the place. It's fun to watch him play. But it was a heck of a U.S. Open because it was a great course, great leaderboard.
Before the heat wave.
Yeah, and great leaderboard. And it was, I mean, that's a brutal course, having played there a couple times.
Oh, really? Well, we'll talk about that. I didn't know that. Okay, great. Red and green on the screen right now. NASDAQ lifts fractionally. The VIX 13.06. Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen right now. NASDAQ futures up 0.1%, Dow futures down 0.1%, but we have S&P futures. They are little changed. The yield on the 2-year, 4.71%. That's little changed. The 10-year yield, 4.24%, and that's up 2 basis points. We'll check in with commodities. We have spot gold lower, $2,320 an ounce. Brent crude, $82 a barrel. WTI crude, $78 a barrel. And the AI boom, well, that continues to fuel Broadcom. The company on pace to rise for a 7th session. Shares up more than 3% this morning after announcing it planned to execute that 10-for-1 stock split last week. And software maker MicroStrategy, their shares little change, but it increased its convertible note offering by 40% to $700 million. And that was a day after it announced plans to use the proceeds raised to buy more Bitcoin. And finally, movie theaters. Well, they had their biggest film debut since Barbie. Finally, Pixar's Inside Out 2. That was it. It pulled in $295 million globally, $155 million in the U.S. and Canada. That's your Bloomberg Business Flash.
That's a good open.
Tom and Paul.
I mean, it's a big
That's
deal.
That's a solid open right there. That's a solid open.
And it's an animated film.
Yeah, I know. Exactly.
Amy Poehler's helping out. I mean, I guess I get it, but isn't it just give people what they want?
Right, and they'll come. Exactly.
You tell me.
No, that's what the
It's big numbers, right?
Yeah, those are solid numbers right there. They can make money off of those numbers.
I mean, Incredibles 2, Lion King remake. Okay.
Yeah.
Very cool.
Yeah. So I mean, it's good for the that whole Pixar Disney thing.
It's a Disney thing, Pixar.
Yes. Yep.
Yeah, Pixar was just on the cover of Bloomberg Business Week.
Oh, of course.
Oh, congratulations. I got a 295 number here on Wikipedia. I mean, Lisa's got a better number than that. Paul, Paramount, there's a heat wave. Why don't they solve this in the heat wave? What are they waiting for?
Don't know. There just aren't any credible bidders out there, Tom.
So you lower the price. That's how the real world works.
Yeah, I think I think we are at that point now where it's just going to be, I'll take any bid that comes across the transom right here.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Massive email. She was in Atlanta. They're like, are you kidding me? Where are the newspapers? Have them do it.
Yep.
From the deep south. Your front pages. with Lisa Mateo, brought to you by Interactive Brokers. Discover the future of trading with their next generation trading platform, IBKR Desktop. Download IBKR Desktop at ibkr.com/desktop. Thank you, Interactive Brokers. Lisa, you were a miss. Go.
Oh, thank you. All right. So you heard about how weight loss drugs, right? There's a problem. Food companies are worried. It has everyone, up in arms. But clothing retailers are actually saying it's helping sales because more slimmer Americans, they need to buy new clothes, right? They have these new sizes.
Really?
They have to buy new clothes. This was in the Wall Street Journal. You got to check it out. And they don't just want a regular wardrobe. They want, body-hugging shapes. They want sexy clothing to show off their new size.
Yeah, like
so
what I wear.
the brands are doing it. They're replacing zippers with adjustable corsets. They're adding more sheer looks to some of the looks that they have. So it's a shift that these retailers
this is a
are
real
looking
story
for.
in a Wall Street Journal.
Yes, yes. They're seeing this shift because they needed the boost. The clothing
Can I
retailers
just say,
needed the boost.
John Farrow was way out front on this. I mean, I'm like, what are you talking about? Where are we 2 years from now with Ozempic, with the Lilly product? Where are we in? It's like $900 a year. Am I right?
It's a lot because it depends on if your insurance covers it or not,
right.
because some do, some don't. But it's just expanding in so many different ways. I mean, all these studies showing how it helps with this and helps with that. There's now maybe one for like pets. I mean, it's getting crazy. Ozempic for pets,
I'll tell you what,
maybe.
it works. I haven't seen it firsthand.
Yeah,
it
you've
works.
seen it.
Okay.
All right, it's a thing. I'm not, I was poo-pooing it all, but it is a thing. My experience is there's no appetite.
Right.
You know,
But that's the thing. So you lose all this weight. So you
I don't
need a
get
whole
it.
new wardrobe. You got to spend
How
money.
does your body keep functioning?
It does, but you wind up losing
protein
muscle.
drinks. Yes, you got to be.
That's the only problem.
You
wind
got to
up
be
losing
exercising.
muscle.
You got to be doing the Lisa Mateo
So you
crazy
got-
in the basement exercise thing. Is it arms or legs today? What are we doing today?
Today's upper body. Thank
Today's
you.
upper body.
Thank God
There you
for
go.
that.
Okay, good time.
Yeah, mine's upper body too. Here, let me pick up this glass of Tang. Next.
Here we go. Apple. This was actually an interesting article from Mark Gurman over in the terminal.
Always.
Taking it slow with the new artificial intelligence offerings that it said it was rolling out. It's going to stretch into 2025. You have the companies. It won't be available for developers to try out until later this summer. When it does launch in the fall, it's going to come as a preview, and some users might even have to join this wait list. But what Mark Gurman is saying is that there are benefits to this kind of staggered approach. He's saying that it prevents like choke points with staffing, but it also gives them more time to train AI models for other languages. So there's different benefits. There's a thought process behind the madness.
All my radars
basically.
up. Paul, what do you think? All my radars up.
Well, I'll tell you what, Apple, as Mark Gurman was reporting, this is kind of what they do. They don't seem to feel the need to rush to be first. They'll be like, we'll be second, third, or fourth, but when we come in, it's going to look awesome. And
Okay,
people are going to say, okay, now I need this smartphone.
This weekend on my phone, Google is giving me AI now. And I dutifully went in to try to figure out how to get rid of it. And you can't. They're forcing me to take some kind of AI in my search function that I really don't want.
Did you try it? You didn't even try it?
It's just too much noise. It's just too, I mean, all my radars up.
Yeah, we'll see. We'll see. But Apple will be
Do people want this? I mean, like Siri, I get the phone. Do you want Siri? I go no, and I move on.
Really?
How many people are like that?
Very few, I think.
But I think it's the fact if you could say, hey, Siri, can you return this shirt that I bought last week? And Siri can pull up the email, find it, send the email automatically to return it so that you can, I mean, it does the work. If it can do that for
Lisa
me.
sold me. Lisa sold me.
I'm sold. It makes my life easier.
Next.
Okay. Wells Fargo. This is interesting. They're losing millions of dollars a month. It had this fancy rent credit card that it came out with about 2 years ago. It launched it with Built Technologies. So the perk is that users can pay for rent without incurring fees from their landlords, while also earning reward points. But the thing is, it kind of backfired because their executives thought that people would kind of get into debt and they can make some revenue if people just charge their rent on it. But people didn't do that. And so they didn't make any money on it. They're losing actually $10 million every month, according to the Journal.
I read every word of the article.
Oof.
It's all accurate. I have lived it.
Really?
And it is a disaster. It's been a disaster for months. There's actually, as I mentioned late in the article, some security issues where people got into my accounts and there's many, many other people, not just me, but it's been it's a perfect example of a conservative belt and suspenders company going, we need to be cool and digital, let's just do it.
Right. Okay.
And it rarely works out. I thought it was a really important
Pay your credit card debt every single month. Do not let it ride. That's what the advice was for the offspring, and I think they're following it.
Yeah.
That's what I
Until they're not.
telling my- until they're not.
Do you have one more?
I do. Okay, more parents, speaking of debt, they're
No,
taking
this is
on
silly.
debt to pay for their Disney vacation. Prices are soaring. This is a survey from LendingTree. 45% have gone into debt for the trip. That's up from 30% in 2022. How much debt? About $2,000, they're saying, on average. So they're charging up just to give their family that experience that they say they did. They said they don't regret it. No regrets. About 60% said they don't regret it. Getting
It'll be
into debt
interesting to see.
for it.
Travel's fascinating. I guess every seat's taken, but prices are lower, into the summer. Well, see, Lisa Mateo, thank you so much, the newspapers, and thank you, Interactive Brokers, as well. It's going to be hot out there. The heat wave, we're talking to Rob Carolan, get him on here. It's not here yet, up in New England, New York City, down to the mid-Atlantic states. I looked last night at St. Louis, and like it, their midnight or whatever, St. Louis was ugly. I mean, it's hot out there.
Yep, it's that time of year, so here we go. A little bit
I
early,
learned
but-
about a heat dome. I didn't know what a heat dome was. It's when the...
Yeah, they have terms for everything now. But,
well, some people use the word heat dome and others, they don't.
Right.
We'll have to see. They both agree that it's too hot out there. We're doing heat wave music today. I mean, I think that's something that,
There's plenty of it, yeah.
Linda
There's a
Ronstadt.
lot of
when
great
you say
choices.
heat wave, you got to play Linda Ronstadt. I mean, we'll do that. Here's the best heat wave song ever. Cool in the Game. You got to start Monday with Cool in the Game. We do. Bloomberg Surveillance.
I remember how we made our way, a little patience, the times we prayed. Can't imagine that this love is through, feeling the pain, girl, when you lose. Oh, it's too hot, lady. Gotta run for shelter, gotta run for shade. It's too hot, lady. Gotta cool this anger. What a mess we made.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, Bloomberg Surveillance on eventful Monday. We started strong with Stephen Englander in this hour. David Rosenberg on disinflation. That's good. The YouTube live chat. I mean, Randy absolutely nails it.
Okay.
How do you have fun at the beach? Here's my favorite beach tip. Have friends with boats.
Yes, exactly. Good call there.
Just absolutely, Randy.
You don't want to own a boat, Tom. You want to have friends that
own the boat. Right. I'll bring the bottle of gin or whatever. Right. Randy, I can't top it. I mean, that's absolutely great. We got a great set of conversation to frame out the week for you on economics, on finance, and on this bull market investment. I've got the green on the screen, red and green right now, but the NASDAQ up constructively. Dollar resiliency and strength as well. We Segui, Lisa, help me here. This is great. We have tours through our Bloomberg headquarters. And you get into something from Baltimore, Maryland, and I thought it was, David Rubenstein with Orioles tickets. Yep. Wrong. Good morning, Roland Park Country School. And this is great. The kids show up, and the teachers or the parents make them write thank you notes.
Wow.
Dear Mr. Tom Keene, thank you for taking time out of your busy day to talk to us. We loved your advice on continuing math forever. Also, to answer your question, your daughter Afterthought should only take the SAT twice. Thank you.
Very good.
Thank you, Roland Park Country School.
Excellent.
This is a lost art. On radio, I'm showing this is a lost art. Am I right?
You're exactly right.
Am I right?
Yes,
there we go. The Mateo kids, they wrait thank you notes every day.
I did it. I wrote thank you notes.
Dear Mom, thank you for going to Costco. Bloomberg Surveillance this morning. It's brought to you by Cohn-Resnick Advisory Assurance Tax. Their industry advisors can customize solutions to help your business create value and increase resilience. Visit cohnresnick.com/advisory. Right to it, our Bloomberg Business Flash, Lisa Mateo.
You got it. We have futures, little change right now. This is ahead of a pretty light week. We have a market holiday Wednesday. So right now we have NASDAQ futures up 0.1%, Dow futures down 0.2%. We have S&P futures, they're little changed. Data on retail sales, that's topping this week's agenda. That comes out tomorrow. This week we'll also see reports on industrial production, housing starts, home resales as well. We'll get to the bond market. The 2-year yield 4.72%. That's up 1 basis point. The yield on the 10-year 4.26%. That's up 3 basis points. What's moving the markets? We have design software maker Autodesk up about 4% right now after the Wall Street Journal reported activist investor Starboard Value. Well, it's taken a $500 million stake in the company. As far as earnings, pretty light week as well. Home builder Lennar reports after the close today. Shares down about 0.3% ahead of its report. We'll also hear from Lazy Boy today. Their shares up nearly 1%. Looking further down the road, we'll hear from Kroger Thursday, CarMax on Friday. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Citigroup is led on participating in the market. Stuart Kaiser was in the other day.
Yep.
I don't know which silo he's from. There's like 8 silos in Citigroup. I can't keep track of it.
He's pretty good though.
But they've been in the game, and they've been in the game because their economics has been just really leadership. Andrew Hollenhorst and the team really saying, look, rates are here. They're going to be higher. And with it, a resilient economy. Not much gloom there. Rob Sockin drives the horse here. He's a global economist for Citigroup as well. Can you look forward and say the same thing? We'll avoid recession?
I think it's a really tough call right now. I mean, if you asked me a couple months ago, I would say it's really feeling like a soft landing. Most of the tone of the data was really within that space. But we've seen a lot more downside surprises over the last several weeks. And I think there are signs for concern. You're still seeing stresses in lower income households. You're still seeing tightening credit conditions, weak credit demand, and a lot of labor market indicators have softened over the last year. And I think the big debate is, are they softening into a soft landing, or are they softening into a larger downturn? Right now, I think it's pretty hard to tell. The labor market overall is holding up pretty well, Payrolls is one of the best signals for the labor market. That's been robust, but there's a lot of softness underneath the surface. So I think it's a pretty close call at this stage.
So close call. What does the Federal Reserve do in a close call scenario?
Well, for them, I think they're watching the data closely, and they've seen some encouraging improvement in the May inflation data. I think they'll need a few more months of good inflation data if the economy holds up well in order to ease rates. But if our U.S. team is right and things start to soften a lot more in the economy, then it's off to the races and they're able to ease a lot faster. So I think if you're in a resilient economy world, it depends. You continue to get that market improvement in inflation. And if you're in a recession world, they're probably not going to know until you get there, in which case they're going to have to start easing rapidly.
Is American exceptionalism as it relates to economic conditions, is that a thing? I mean, look at the U.S. versus Europe, our good friends in Germany, for example, Asia, good friends in China. I mean, how do we think about that?
Well, it's a great question. I would say 2 points. On the developed market side, it really has been an exceptional story with the U.S. If you look at major developed markets, the two best performers have been the U.S. and Australia. They're way ahead of the pack compared to a lot of other economies.
I mean, I never think of the Australian economy. I mean, are they tied to China?
Well, it's beyond that. They've had a very robust consumer, similar to the U.S. In Australia and the U.S., they seem to be two of the only consumers that have been willing to draw down the excess savings they built during COVID, and you've seen very strong consumer performance. But more broadly, in terms of exceptionalism, actually, it's been a pretty exceptional year for the global economy. Almost every major economy around the world has consistently surprised us to the upside this year.
Alan Greenspan said, follow the stock market. In an Econ 101 book, folks, the stock market's about chapter 23. Nobody gets there. But can you link the effervescence of someone like Stuart Kaiser at Citigroup into your economic call? Does the stock market follow the economy, or does the stock market get out front and tell you it could be a better place in a year or two?
I think it's a great indicator to watch because, as you said, Econ 101, stock market's supposed to be forward-looking. And I think what you're getting from the stock market in general is they are seeing that economic resilience story. So they are more in the camp that the U.S. is going to be in a soft landing. And then the question becomes, well, how fast does the Fed ease rates in that environment? And so obviously watching inflation data closely and get a lot of gyrations there.
So, and you've got some, as Paul mentioned, you've wandered into the Eccles building and probably had lunch at the big table there in the room. The answer, Rob Sotkin, is now they have to come out with all sorts of speeches after this press conference. What do they say?
Yeah.
How do they editorialize off of what we observed the other day?
Yeah, absolutely. And I think what we're having two challenges. One, there's always a lot of Fed communication to begin with, much more so than a lot of other central banks. But on top of that, you're having a Federal Reserve that is extremely data dependent, and markets are having a hard time interpreting how they're interpreting each move in the data. And so I think following that press conference, you heard Chair Powell not be too worked up, in my view, about the rise in the unemployment rate, some of the softer labor market indicators, maybe leaning more on the resilience that we've seen, and also encouraged, but not too encouraged, by the improvement we've seen in inflation. So I'm very much expecting a similar message out of these speakers, but it's tough. I mean, I think as you get later in the cycle, you would expect more disagreement among speakers. And actually, I've been surprised by the lack of disagreement, relatively speaking, among these speakers, that for the most part, they kind of stick to their book.
How unusual is it for the Fed not to be leading in terms of interest rates moves? We've had the European Central Bank move, the Bank of Canada. I mean, is the Fed supposed to be leading, or it doesn't really matter?
It's extremely unusual. And earlier this year, we were thinking, well, these central banks are probably going to move more closely together. The Fed usually leads. And we already saw the ECB move before the Fed, the Bank of Canada. I think what we're seeing in this environment is a lot of the pressure these central banks are seeing are domestically driven on the services side of the economy. So they're willing to move ahead of the Fed if they need to, but they would prefer to move in synchrony. So I think if you're in a higher for longer Fed world, I think these central banks are going to have a harder time diverging from the Fed as we get later into these easing cycles.
Rob Sotkin, thank you so much for Citigroup this morning on global economics and always American economics as well. The NASDAQ rises, Dow a little bit negative, flat on the Standard & Poor's 500. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Donald Trump meets today with the House Speaker, Mike Johnson, at Trump's resort in Mar-a-Lago. This meeting comes not only as Donald Trump tries to win back the White House, but as House Republicans try to maintain the majority in the U.S. House, with both sides seeking to help each other. Bloomberg's Laura Davison.
There's a couple things that House Republicans want is they want to make sure that there's not a lot of drama in some of these races. Back in 22 and in 2020, Donald Trump put his thumb on the scale for several key Republican races. And there's a lot of sort of conventional thinking among Republicans that he chose poorly and caused the Republicans to not be able to gain a majority. So they're trying to make sure that everyone's on the same page and there's the same message of unity that Donald Trump talked about when he was on Capitol Hill last week.
Bloomberg's Laura Davison. Israeli Prime Minister Benjamin Netanyahu has dissolved the influential war cabinet that was tasked with steering the war in Gaza. The war cabinet was dissolved following the departure of opposition lawmaker Benny Gantz, who had joined the coalition in the early days of the war. It comes as the Israeli military says it is pausing fighting during daytime hours along a route in southern Gaza to free up a backlog of humanitarian aid deliveries for desperate Palestinians. Fire season in Sonoma County, California is wasting no time in getting started in the state's north. Red flag conditions were reported Sunday, sending CAL FIRE into action where they're chasing wind-driven flames. Patrick Pickett was leaving behind his home as evacuations take place all around him. He looked back at his property as he was leaving.
All of our neighbors on West Dry Creek have been evacuated, and it's heartbreaking. It's been really hard.
Firefighters expect crews to be busy well into today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Appreciate it. Thought of Paul Sweeney this weekend. I was working. He wasn't. Heather Gillers with a really important article in the Wall Street Journal. Pensions piled into private equity. Now they can't get out. You've been screaming this for 2 years. This is serious stuff.
There hasn't been a lot of activity in terms of monetizing some of these investments in private equity. Typically, private equity likes to make an investment of 5 years, 6 years, 7 years. That's kind of
I agree. It's
a
like
lot
7
of these
years
things.
And now it's okay. Now what?
Now there's a lot of big deals that are 10 years. And your limited partners I like a little liquidity, please. I mean, can you sell this stake? Can you IPO it? Can you do something? But we've had a market, Tom, where there really hasn't been a lot of M&A activity, not a lot of IPO activity. So it just hasn't been a way to monetize it.
Why
so it's a
would
challenge.
you, if you have, and they got a great chart in there, blah, blah, blah. It doesn't work on radio. But the bottom line is liquidity has a value. I learned that, CFA level 8 or whatever. There's a certain value to liquidity. I don't see it in private equity.
Well, it's really just been the last 4 or 5 years, Tom, where we've had these interest rates surge, and that's really put a clamp down on activity. But prior to that, you look at some of these university endowments, they've got 30, 40% of their endowment.
Exactly. Alternatives.
Whoa.
What happens?
Well, you have to mark to market. And, some of these things are going to have to be marked down pretty significantly, particularly if you have any real estate exposure. But so we'll have to see. But again, it's just been, you get those high returns from private equity. One of the risks is you don't have a lot of liquidity, so you just got to wait.
To me, it's a huge story coming up. Not even like this year, but 2025 is, your attention in a number of minutes in this 8 o'clock hour. David Rosenberg, good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, futures, well, we got red and green on the screen, but little movement. Investors are kind of assessing political volatility in France, elsewhere, while traders, they're just awaiting policy decisions from major central banks this week. Over the weekend, you had the Fed's Neil Kashkari. He told CBS that the central bank can take its time and watch incoming data before starting to cut interest rates. Right now, NASDAQ futures up only 0.1%, Dow futures down 0.1%, Dow futures down 0.1%, S&P futures, they are little changed. We have the 2-year yield, 4.72%. That's up 2 basis points. The yield on the 10-year, 4.26%, and that's up 3 basis points. Shares of American Airlines down about 0.2%. The carrier, its flight attendants union, they're planning another bargaining session for tomorrow to try and avoid a strike this summer. Bill Gates said he's prepared to put billions into a nuclear power plant project in Wyoming. TerraPower will expect to complete the new reactor in 2030. And sources say Tesla, well, it's been granted approval to test its advanced driver assistance system on some streets in Shanghai. Tesla shares, they're down about 0.3%. There was also that report that Cybertruck deliveries have been delayed because of issues with windshield wipers. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Paul, the topsy-turvy week, and we're going to get Rob Carolyn, and not today, but, we'll get him in here.
Yep.
The tippy top of Maine, above Quebec City. I didn't know that.
I didn't know that either.
And not off the water like where FDR used to go way up almost to Quebec, but potato country. There's Fort Kent where you go across the border.
Okay.
It's going to be 93 or 95 in Fort Kent.
What are those people?
Wednesday.
They're not used to that up there.
No, it's
the snow just melted.
High.
The snow, they're just putting their shovels away.
It's like 60 miles from the St. Lawrence Seaway. You can hear the waves. You know, you can see the boats go by.
Yep.
Good morning, Northern Maine.
Love that.
Thrilled that you're listening on YouTube. We like that.
Northern Maine. You have to say Northern Maine. Isn't Maine just by itself?
Maine by itself is very northern. Yes, you get above Portland, and Gerard Cassidy tells me that you get 40 miles above Portland, and that's deep into the trenches of northern Maine. We're going to go deep into the trenches of what yield tells us now, because right now, yield and equities are sort of two different worlds. Kelsey Barrows with us, working with Bob Michael. She's got a fancy title, Executive Director of Fixed Income. She translates Michael's Greek and Latin. Kelsey, why does the bond market seem so different, so range-bound as compared to the equity market?
Well, I think that what the bond market is really focused on is the data, particularly the inflation data. And there was a lot of concern just a month ago that inflation was not contained, that the strength in Q1 was actually a reacceleration or the start of a new trend. And we wanted to push back on that. We really did feel that ultimately the disinflation narrative should remain intact over time. And the last two inflation prints are very important for keeping the soft landing alive, keeping rate cuts alive later in the year. Also keeping alive the idea that fixed income can be a successful hedge for risk positions that only works if inflation is under control. And so I think most important over the last week, it wasn't the Fed's dot plots, it wasn't all this Fed speak, it was the data, it was the fact that there is still signs that inflation is coming down.
So I look at the labor market, for example, and I see, I don't know, it's 3.8, 3.9, 4%, we're somewhere, but it still feels like fully employed labor market. If that's the case, the Fed can't do anything right now, can it?
Well, I think that they view it as the policy rate is already very restrictive. And if inflation comes down enough, then they can fine-tune policy to keep the labor market as strong and as resilient as it currently stands. But I think that they're also very attentive of the fact that the labor market moves in very nonlinear ways. And there's a risk that over time, the softening in the labor market turns into something more challenging. And I don't think we're there yet, but that is our debate right now. We had our investment quarterly last week, all of our senior investors. We got together actually at our Columbus office. And
Columbus?
Yes.
Ohio. Nice.
Yes.
What are you guys doing in Columbus, Ohio?
We have a lot of our investors. Yes, big office there.
I didn't know that. Okay.
So we go there at least once a year.
Okay.
And so at that meeting, the debate was over the labor market. So what do you have? You have on one hand, I would call magnificent strength in payrolls, right? Strong payrolls, low jobless claims. And then on the other hand, you have this very sneaky weakness in some of the labor market data, particularly the household survey. And, you know, this increase in the unemployment rate you've seen so far, 0.6%, we're right on the cusp right there. So I think you do need to be very attentive. And that's the other reason that's pushing the Fed towards this framework of hold or cut.
So are you guys in the camp of maybe they should start cutting sooner rather than later, or can they wait?
Well, I think they can wait. They're in a strong position as it stands today, but we do think that ultimately by September, they'll be able to cut. So
September, good. I like that.
Enjoy the summer.
Yep.
Enjoy the summer vacation. Collect your carry. We do think that you should be staying invested in
Collect
credit.
your carry, Tom.
Collect the carry, and look forward to when you get back from summer vacation, the Fed should have enough data to cut in September.
Well, I you know, and it was wonderful for J.P. Morgan to join us during the Fed show. And I think Bob Michael and I agreed it was an absolutely surreal press conference. It was not so much what they wanted to say, but what they didn't want to say. What is the Fed silent about now as we go into all sorts of Fed speakers?
I mean, they're silent about the fact that they can't predict the data any better than anyone else can. And ultimately, it's the data that's going to drive.
Right now, I would suggest the data is an immigration overlay on some unthinkable, unfathomable technology overlay we really don't understand.
Yeah, and I think that's why they're being cautious. But I think the dissonance that we heard between the CPI data that morning and then the press conference later that afternoon was the fact that, you know, Chair Powell has his own view. I think he's probably one of the two dots, like so 2 cuts this year, so not in the median at this point. But he, when he speaks at his press conference, is representing the full group. You know, he's representing the consensus when he speaks. And so he had to, in a sense, try to explain what was the shift in the median dots, even though his dot may have still been 2 cuts.
Is it true, J.P. Morgan, that you hold your Columbus, Ohio soiree at the Little Bar right by the stadium?
That would be good.
We're actually over in the Polaris area, so not in downtown Columbus.
You're not on the bar strip there at Ohio State.
But Tom, have you seen the new building on Park Avenue? It's like really just almost, I think it's almost done, but you could say it's another year,
Oh,
right?
no, it's got to be, 2 more years?
I think it's going to be another year, maybe next summer is the goal.
Yeah. Have you picked out your curtains?
Yeah. I mean, they're getting a corner office for Kelsey.
Well, Michael gets a corner office.
I don't know. He gets a bullpen. We'll stick him in a bullpen.
Yeah.
Yeah. So, I mean, it's just going to be awesome.
Well, it's really important. It's about the vitality of New York City, and you've got not only the commitment of J.P. Morgan on Park Avenue, but Mr. Griffin of Citadel's decided to erect something on Park Avenue. I'm going to call that 2030.
Probably.
And I think there's even a third project now. I can't. There's
Yeah,
like I look out and there's like cranes. It's like, is it like Dubai? No, it's not like Dubai.
But it's like, it's also
but it's like happening.
Realization, how much can you do in South Florida? I mean, it's nice to have an outpost there. But are you going to base everything in South Florida?
Can we make some news today? Is J.P. Morgan fixed income moving to Florida?
They're probably going to Columbus before they fixed income goes
They'll move to
Columbus. Exactly.
Lucky you. Kelsey Barrow, thank you so much to J.P. Morgan. An update there on the mysteries, and I mean mysteries, going forward as well. Paul, I look at dollar resiliency, and of course some of this is off the geopolitics, particularly of Europe. I read avidly the news flow on the English election, the United Kingdom election, I should say, and also the craziness in France right now of 2 elections.
No, you're exactly right, Tom. When you think about the meeting we had last week of the folks of the G7, and you think about that, the photo
Is that
op,
uncomfortable?
The boy,
Oh
I mean,
my
you
God.
think you look at half the people on that stage are, you know, they're fighting for their political lives in their local country, and what can they get done as an international body?
Rounded up, dollar renminbi 7.26. We're not there yet, but we're getting there closely. Some real interesting movements in the world of Damian Sassower as well. Let me editorialize. Paul's going to tell you about it. David Rosenberg is beyond fired up. There's no other way to put it. He is correct on a disinflationary trend. From New York City on a Monday, Bloomberg Surveillance. Good morning.
All right, as Tom mentioned, David Rosenberg, founder and president of Rosenberg Research. He's going to join us, as will Tony Crescenzi, PIMCO executive vice president. He's going to be in studio. How about that? People coming out of the woodwork today, coming into our Bloomberg studio. How good is that? Rosenberg Research and Associates, plus Tony Crescenzi, PIMCO Executive VP. He's going to be in studio. So we got a lot coming up here as we shape out this market.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have little movement in futures as U.S. stock bulls. Well, they got even bolder. Goldman boosted its year-end target for the S&P 500 to 5,600. Evercore upped its call to 6,000. Right now, NASDAQ futures up about 0.1%, 28 points. We have Dow futures down 0.2%, 89 points. S&P futures, little change, down about 2 points. We'll head over to the two-year yield, 4.73%. That's down up 2 basis points. We have the 10-year yield, 4.26%, and that's up 4 basis points. We'll check in with shares of Nvidia. They're up another 1%. Its recent 10-for-1 stock split, well, it's keeping that rally going. And then we have companies making news like Danone, the French yogurt baby formula maker. It's betting its medical nutrition unit by stepping up that investment in nutritional drinks for cancer patients and also the elderly on top of it. And when it comes to popular apps, Uber Eats actually had the biggest weekly increase in app downloads among food and grocery delivery services in the UK and the US. That's according to Bloomberg analysis of data from Aptopia. Grubhub had the biggest drop, so Uber Eats apparently the most popular. That is your Bloomberg Business Flash. Tom and Paul.
I don't allow my kids to
do
use
that?
that. No, I cut off my youngest
Are
credit
you
cards
kidding?
over the weekend. Cut off, shut
Cruel
off
and
for 3 days.
unusual punishment.
Yes, I mean, because we have this thing, no Uber Eats, DoorDash, any of that garbage.
So I can use you as an example when I.
Yes, he was cut off for 3 days.
It's so much more
I
expensive.
forgot to turn it back on, but
That's outrageous. It's outrageous.
I mean, a $15 like food order becomes $25 or $30.
Yes.
Yeah.
Yes.
Speaking of nutrition,
yes,
out on YouTube, folks, for those of you on radio on Apple CarPlay worldwide, there's a camera that shows us on the break. I'm sort of sitting here like a potato. Lisa's very active. Thank you out on YouTube for notice. Lisa coming back with a healthy breakfast, no doubt. Pray tell, what are we quaffing this morning?
This morning we have some oatmeal with some protein powder, chia seeds, and peanut butter powder.
Do you want to show off this new bottle that we got?
They love this.
A fan set
and I
in?
have to, of course,
Is there a
wash
side
it
of
down.
bacon?
No, no bacon.
Okay.
But I have to wash it down with my fancy new TK bottle.
Wow.
That is the original triple leveraged all cash fund.
That's a Yeti.
Thank you.
Wow, that's
The
very
Yeti.
nice.
Somebody
with the
sent that in.
initials.
Thank you.
That is
It came
very
full
nice.
of tang.
I was doing it again.
Lisa
Didn't
threw
come with a
out the
little extra.
tang, I should say. But I'm glad
Very
somebody.
fancy.
I'm glad somebody here has some nutrition.
Yes.
Is going to say.
No Egg
the
McMuffin over
least.
there, that's for sure.
We need to dive into this, and we're going to get him on many times here as we dive into the summer. David Rosenberg owns the study of inflation. He was literally iconic at Merrill Lynch in parsing inflation. Frankly, folks, he invented it. He did it before anybody, and it's good to have him on when he's right, which is we've got a new disinflationary tendency. How extensive, David Rosenberg, can our disinflation be?
Well, I think that the disinflation momentum, which has restored itself after some of the earlier distortions, is going to surprise a lot of the what I call inflation phobes. I think we're going to finish the year very close to 2% on headline inflation. And the way I'm seeing the aggregate supply, aggregate demand curves behaving, I think we're going to get down towards 1.5% by the end of next year.
Wow.
So, David, what drives that inflation down? Because if you talk to the folks on the street, they're saying, boy, my supermarket and the gas station, I'm just not seeing it. What's going to be taking us down that route?
Well, I think the problem is that people tend to conflate prices with inflation, and inflation is not the price level. It's call it the year-over-year percent change in the price level. I mean, look at Paul Volcker, in the Hall of Fame of central bankers for being the greatest inflation dragon slayer of all time. But, nobody calls him the CPI dragon slayer. Prices never went down under Volcker. In fact, the CPI in a 7-year tenure went up 40%. What he's renowned for was taking the inflation rate down from 14% down to 4%. So yes, prices are high, undeniably. But the rate of change is dissipating. We had a couple of earlier quirks. Let's face it, a lot of it was auto insurance in response to the lagged run up in claims. That seems to have run its course. The rental measures are taking their time subsiding, but we know that that's staring us in the face. My analysis is just strictly top down. It's really looking at where's the output gap today, and then what's your forecast on how the aggregate demand and aggregate supply curves are moving?
But then, David, what is this Fed going to do? You are a great student of the history of our central bank, and there's this absolute delusion I see that the Fed can get out front. Don't they, by definition, have to be dramatically ex post and wait for the Rosenberg disinflation?
Well, I don't think that they have to wait. I think that the Fed is still somewhat shamed for having missed 9% inflation in the summer of 2022 and leaning so hard on transitory, although 18 months in real time doesn't sound transitory, but in the overall annals of economic history, 18 months is still pretty transitory. But they still seem to be fighting for their credibility. When they talk about that they need more confidence, just saying that they need more months or many more months of the disinflation trend that really dominated most of last year. So I think that part of it is just basically the horrible memory of what happened in 2021, 2022, and blowing the call. And that's one of the reasons I think that they're going to be deliberately slow to start cutting interest rates. But I think when they do, they're going to be pretty significant.
Are they deliberately slow, David, or are they already behind the curve in terms of not cutting rates?
Well, look, the yield curves told them they've been behind the curve for at least a year. I think that what got in the way last year was the boost to aggregate demand from the fiscal stimulus. Not many people thought the deficit was going to expand 25% in a year when the unemployment rate was south of 4%. So I think that was part of it, was the fiscal stimulus. And I think nobody at the Fed was expecting that every penny and then some of the excess savings file was going to be used to stimulate, consumer expenditures. But that did happen, all in the rearview mirror. So I think that, that are they behind the curve? I think they're behind the curve. I think that people will be surprised at how soft the demand side of the economy, well, as it was in the first quarter, but going forward. But also, I think that the confidence the Fed needs on the inflation front is going to come. I think they'll be cutting by the September meeting.
David Rosenberg with us, Rosenberg Research, Toronto. We continue. Paul Krugman, the laureate, publishing in the recent hours, and he agrees with Rosenberg. Headline, ex-shelter 2.1%, core inflation, ex-shelter sub 2%, 1.9%. What does the stock market do, David Rosenberg, given a disinflation? I understand there's an ambiguity there. Which way does it tilt?
Well, Tom, when you're asking me about the stock market today, you might as well just ask me about what's Nvidia going to do. It's Nvidia, Microsoft, Apple. You could argue that what investors are pricing in for Nvidia, which is a long-term accelerating growth profile, has nothing to do with the contours of the business cycle. But I mean, come on, we have three stocks that account for 20% of the S&P 500. Half the stock market is actually languishing below the 50-day moving average. And look at what the small caps are doing. And you look at the widening divergences in the stock market. It's really quite impressive. But you're just looking at NASDAQ and the S&P 500. I guess that it has nothing to do with anything. That basically maybe Nvidia will just be Jack and the Beanstalk, right? And is impervious to the business cycle. But that, if you're talking to me about what mega cap tech stocks would do in a disinflation environment and in a lower rate environment, well, considering that they're the longest duration stocks in the stock market and they have command the biggest market share, maybe the major averages, maybe outside the Dow, because they don't have those constituents, continue to go up. But it's not giving you any sort of real economic signal.
Okay, but Paul, what's important here, Rosenberg harkens back to the concentration of the Canadian stock market, which used to be Canadian Pacific, Toronto Dominion Bank, and Molson Golden. Peter Lloyd was my stockbroker years ago, and he said Molson Golden is one of the big three of equities in Canada.
Absolutely. I'm right there with him on that. No problem. So, David, how do we think about, the earnings power of some of these, of the S&P 500 here? It seems like the earnings have been pretty solid. I mean, I'm not sure what that's telling us about this economy here.
Well, everybody says it's an earnings-driven market. But what are earnings up over the past year? 6%, right? And the S&P 500 is up more like 30%. So, if we had the stock market up 6%, earnings up 6%, I'd say 100% earnings-driven market. But it's been principally a multiple-driven market. And that's just a sign of what? Animal spirits, momentum, psychology, sentiment. These are important things that go into the stock market. But I would say that earnings have been okay. They certainly don't justify the level of the market price that we have right now. But of course, when you have the major mega growth tech stocks pricing in a future of 5 years of huge double-digit growth, and in fact, with Nvidia more like triple-digit, well, you're going to get this market action. But last October, the Ford multiple was even lofty then. It was sitting at 18. Today, it's 21, 3-point multiple expansion. And that's without the benefit of the Fed doing anything. So a lot of this is just basically classic John Maynard Keynes' animal spirits and a tremendous level of confidence over the future. But to tell me in the here and now that this is earnings driven, really it's been one part earnings and it's been 5-part multiple expansion.
So are those big tech, Magnificent Seven, or however many names are in that group today, are they, should investors be getting out of them, lightening up on them, hedging them?
I would. That's what I would recommend. But we're talking about tremendous emotions that always grip the stock market, which is fear and greed, and everybody always thinking they can get out of the top. I'm a big fan, not just of diversification. Well, that's been thrown out of the waste paper basket. But I've been saying that what is wrong with rebalancing the portfolio? But I'm finding that so many investors now have fallen in love with their stocks. My motto is fall in love with your partner, not your portfolio.
Oh, listen, Dr. David giving us some advice there. Thank you so much. David, I got one final question. Mr. Trudeau at G7 looked as lost as all the rest of them. What's the political calendar in your Canada? When is there an election to determine the path of a beleaguered Canada?
Well, October of next year is the election date for Canada. And right now the polls are showing that the Conservatives are going to win a landslide majority. And every poll is saying the same thing. So chances that we'll have a new prime minister just over a year from now.
Maybe Justin Trudeau could become GM of the Montreal Canadiens. That'll fix him. David Rosenberg, thank you so much for the Rosenberg Research. Always good to speak to, but particularly when disinflation clicks in, some nuance there and wisdom. I think what Professor Krugman talked about, the housing market's nuts. It's nuts.
Yeah.
Maybe we're colored, but
there's just no supply out there. So when something comes up with the market, it just goes, people go crazy for it.
And there's a lot of cash. People are just taking Nvidia and trading it in and buying,
Yeah. It's, again, if you're long assets, whether it's stocks, bonds, real estate, you're generally in good shape in this economy. Even with higher interest rates, you're getting higher interest income on your savings. But if you're those that don't have those types of assets on their personal balance sheet, at the lower end of the economic spectrum, inflation is so much a bigger part of your day-to-day economics, and that's what I think we're hearing from folks, and that's what we're seeing in the data.
Yeah, we see it, and of course a lot of people talk about Walmart getting a new kind of customer looking for bargains as well, and other places like Walmart, I should say. Red and green on the screen. This is a Monday churn to the market into the heat wave. Dollar stronger, that's important. Yen 157.90 bears careful watching as well. Euro, a lot of different opinions. Thank you, Stephen Engler, for joining. Audrey Child-Friedman to be this well on dollar. And on Euro, 107.11 on the Euro. Gold, Paul mentioning 23.34. Brent crude rounded up $83 a barrel. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have NASDAQ futures up about 0.1%, 21 points at 19,966. Dow future down 0.2%, 89 points at 38,918. S&P futures little change, down 4 points at 5,498. Over to the bond market, the 2-year yield 4.73%. That's up 2 basis points. The yield on the 10-year 4.27%, and that's up 4 basis points. We'll check in with commodities. We have spot gold lower, $2,320 an ounce. Brent crude, $83 a barrel. We have WTI crude at $78 a barrel. And the AI boom continues to fuel Broadcom. Their shares up more than 3% after announcing it plans to execute a 10-for-1 stock split. Then you have software maker MicroStrategy. Their shares, well, they're down nearly 1%. It increased its convertible note offering by 40% to $700 million, and that was a day after it announced it plans to use those proceeds raised to buy more Bitcoin. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. It's going to be a joy. We're going to get right to it. David Rosenberg, and then you go into Anthony Crescenzi.
Not bad.
Rosenberg's the only one that ever read Crescenzi's book. I mean, that's why we had him on back to back. How many pages was Stigham's?
Not enough. Not as much
1,200
as
pages?
War and Peace, and not as much as a Fabozzi book.
Yeah. Well, Fabozzi's Fabozzi. I mean,
did
he gets a pass.
A webcast with Fabozzi last year, and it was
what was that like?
Wonderful. It was such a great honor. I've known about him for 40 years, and I was surprised to hear that he sounds a little like me with a New York accent.
He sent me he sent me the most wonderful, kindest note once. I have it framed.
Gentle creature, great mind.
He sent me a lovely note. He said, "You have no idea what you're talking about, but keep doing it." Good morning, Mr. Fabozzi. And yes, I read it. What was great, folks, inside baseball, there's 2 ways to model out the core equations of fixed income. And on an integral calculus basis, there's 2 different forms of math. Fabozzi uses the old style form from way back versus the new, and for kids, it's tough.
Yeah,
I mean,
like, how does someone understand? How does a person understand where a U.S. 10-year yield should be? We typically, the simple way back of the envelope is to break it down into 3 components.
Is that working now?
We think it is. Think about it. And I'll go through it very quickly. Inflation. Every investor wants some compensation for inflation rising, or else you could invest in real estate, as you were talking about before the break. 2.5%. Use 2.5-ish for that. The Fed targets 2. It may not get there, so 2.5 is pretty reasonable. 3 is unreasonable because the Fed has every bit of power to bring the inflation rate down. Secondly, add in what they call the term premium. When you step out many years in maturity, you want some compensation for the risks that you have in going out that far. So typically that's about a percentage point. So let's use 0 to 1, though, because it's been negative for a little while. And finally, there's something else called the neutral rate. Where does the Fed think its policy rate is neutral? PIMCO thinks it's 0 to 1 over that inflation rate. So let's add the 3 together. We had 2 components that are 0 to 1, and 1 that's 2.5. That's 2.5, 4.5% for a prospective range. Now, you could easily argue that perhaps some of these are biased upward in the 2020s. It's not like the 2010s, which is the wrong analog for thinking about inflation and interest rates. So perhaps it's a little higher, but it does show that today with the 10-year 4.25, with that prospective range 2.5, 4.5, seems pretty reasonable. Now, final word, and Paul, is if you think that the inflation rate should be higher in this equation, you're betting against the Fed. And the adage is, of course, don't fight the Fed. Today, an investor should believe in its eventual success. And that means accepting that today's yields probably are attractive.
Okay, we got to make some news. Is the 10-year going to go under 4%?
The 10-year is highly likely to go below 4% in the next several years, and therefore below where the interest rate forwards are. And all fixed income strategy centers around beating the forward interest rate. Take that as a given. And so today it seems easy, I don't want to call it a layup, to invest in bonds because the market is so bearish with thinking that the Federal Reserve won't lower its policy rate anything below 3.75% the rest of the decade. Remember, it was 0 not too long ago, so it's plausible it gets to 3.
So, just looking at the data, what do you think our Federal Reserve should do for the remainder of this year?
The Federal Reserve should keep doing what it's doing. In 1994, I called it tough love. The Fed's delivering medicine. 1994, because the interest rate on the 10-year was 8%, because the bond market was thinking like the 70s and 80s, because it wasn't that far in the background, that the inflation rate would accelerate when growth did. The Fed, by acting tough, higher for longer, as they call it today, suppresses inflation expectations. And you see that in TIPS, which last week had a bad week because the bond market's thinking the inflation rate would be lower. That's success. So acting tougher, keeping the rate higher for longer, is what brings success to the bond for the economy in terms of the inflation rate, success for the bond investor, and for those who have so-called credit and equity beta, some linkage, some components in their portfolio that has equities and credit because they benefit from low inflation. So it's the right path to stay tough in the end, because the mistakes of the 70s and 80s was, early 80s, I should say, not the early 80s because Volcker was in place, was not acting tough.
So, I mean, do I just sit with my 2-year treasury close to, 4.75%? That's not a bad place to be.
No, it's not. But all the studies showed back to 1978 that core fixed income, 5, 6, 7-year maturities beat cash, and the 2 years sort of like cash, just a string of quarterly bets on the Federal Reserve out to 2 years, beats cash 90% of the time, an average of 3 percentage points per year, meaning that it's too late to be tactical and own a 2-year or a short-term instrument like a T-bill.
What are you seeing in flows? Think Jerome Schneider in his short-term excellence. Year-to-date, he's in the 86th percentile. That's rock star numbers. 5-year track record, 81 percentile. Really solid. But what are people doing? Sweeney's kids are in that fund.
Yep.
But what is everybody else doing?
Me too. And I have some of that sprinkled in with core fixed income. And Jerome, one of my idols at PIMCO, the king of the money market with the vast complex he manages.
He doesn't take the 2-hour lunch you take. I mean,
He
that's
doesn't.
why.
And he still wears, like me, Tom, a tie, and you're wearing your bow tie.
Yep.
It's a rarity these days.
It
I'm
is.
still shopping for them in Sicily, etc. So we would say the flows look excellent, but there's more to come because investors still, as I know as I travel around the world to see clients, still a little hesitant, even though the Bloomberg aggregate, which is basically the core fixed income, has a gain of over 4% now, I think, for that particular index in the past year. And it looks like the prospects are good. Now, remember one final rule of thumb. The starting yield is the major determinant of future returns. On a 5-year rolling basis, that Bloomberg aggregate, if the yield today is 5%, and it roughly is, that's the return you're likely to get the next 5 years. And that looks pretty good relative to where the inflation rate's highly likely to get to because the Federal Reserve is determined to get it there in the 2s.
Do I take any credit risk in this market?
We'd be careful about the extent to which you take credit risk and where you get your credit risks. You don't need to take a lot of risk these days to have high yields. In that Bloomberg aggregate, it's 40% treasuries, 25% mortgages near AAA. So simply be extremely careful and diversify your sources of credit, including asset-backed securities. We purchasing, for example, credit card-backed, automobile loan-backed securities, short maturities, 1, 2, 3 years, 6% type yield.
There's a heat wave coming. There's a heat wave coming. Staten Island's like dangerous. You know, Tony Crescenzi's Staten Island. You don't want to swim around there.
Well, I put a pool in last year.
Did you go?
Yes. It's only 5 feet because anything above my height, near 6 feet, I can't swim in.
Just smile. Lisa will come over this weekend like she came over to Paul's this weekend.
I was wearing my snorkel in the backyard.
Did you swim, when you were a kid, did you swim at Faber Park?
It's a 4-foot round pool in the backyard. That's why I can't swim. This is a concrete jungle, so I don't know how to swim at all. I can't swim from one end of the pool to the other.
When you were a kid, you didn't go to Faber Park or the Lions Pool?
Staten Island, we didn't have buses that went there.
Staten Island, the pride.
You got a pool in your backyard.
We do, but yesterday I was wearing my snorkel gear just in a 5-foot pool.
I mean, Tom, undergraduate degree, City University of New York, St. John's at MBA, you can't get the guy out of the city.
No, you
can't. 8 years in Newport Beach. 8 years.
And
but
that was
never
probably
touched
the
the
longest
water.
8 years of your life,
Stayed
right?
away, loved it there. West Coast can be the best coast. April to October, the weather's wonderful. No rain. 2
but
inches
you work
total.
from home in Staten Island with your floaties on in your
Literally.
pool?
It's kind of embarrassing. There's some photos on the internet.
Isaac's probably listening to this. Tony Crescenzi, thank you
Thanks,
so
great to
much.
see you,
There is a heat wave. It's out there. It's serious. It's about tomorrow. I don't think it's right now. There isn't a heat wave now.
No, late couple days.
But you got to get out front. There's only one song. Ronstadt.
Exactly.
She was rolling in the 70s. Linda Ronstadt, the heat wave, it's coming. Be smart. Be cool.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo with us as well. Getting started on a Monday. Certain level of summer there, and of course the heat wave coming and all that across much of the eastern and up into New England, United States as well. But there's a lot of different stories. We've barely touched on the geopolitics, and particularly England and France exploding. And first thing I looked at, the France yield is compared to Germany, the France-German spread, and it's up wider today, showing more tension.
Yeah, exactly. So we're seeing increased risk there across Europe. And it was just, again, we saw the G7 last week. It was perfect timing, it seems like, for a lot of these leaders who aren't really sure of their home economics, but that's playing out in the marketplace.
And, of course, the debate, David Gura will be providing us with wisdom on a presidential debate as well. I think he's stopping by this week.
I hope so.
I think so.
Yeah.
As well. Huge. Thank you out on YouTube. Of course, subscribe and search Bloomberg Podcasts out on YouTube. The live chat just on fire this morning. Paul, you got to love it. This guy's listening in Maui. Why aren't we in Maui?
Yeah, why aren't we in Maui?
Maui. Tell Mr. Crescenzi if he owns a pool, he has an obligation to learn how to swim. We go to surveillance swim correspondent, Lisa Mateo. I mean, Lisa, I was level 2 Red Cross. Okay. I got the front glide to click, and I did sort of a Fako backstroke, but the floaties got in the way. You were rocking level 10, front crawl, back crawl, elementary back, breaststroke, and side stroke.
Yes.
I mean, you killed it, right?
I did. I was a member of the dive team as well. I was a lifeguard. So, yeah.
So do you, in Crescenzi's 4-foot pool in Staten Island, is he like floating around like, he's trying to
got his little floaties on.
Get your floaties on, and the boat's sinking. You've got to learn how to do this. Was that it?
He's got to learn how to swim.
One of the biggest bond players in the market. Swimming those little
And
pools.
on Staten Island, an island surrounded by
water.
water.
Surrounded by water.
He
Good
doesn't
point.
know how to swim.
Good point.
Very good. We thank surveillance lifeguard Lisa Mateo for that wisdom this morning. I do seriously want to say, folks, dollar, you got new dollar resiliency really crawling away from dollar weakness. The euro 107.16 and 106 there, revisited from last week, would be important. Our Bloomberg Business Flash. Lisa Mateo.
You got it. Right now we have futures, little change this morning. This is ahead of a light week. We have the Juneteenth holiday on Wednesday. So we have NASDAQ futures, little change, up about 7 points at 19,953. Dow futures down 0.2%, 92 points, 38,911. S&P futures down 0.1% or 6 points at 5,496. On the economic calendar this week, retail sales tomorrow. That's followed by reports on industrial production, housing starts, and home resales. And then over to the bond market, we have the 2-year yield, 4.73%. That's up 2 basis points. The yield on the 10-year, 4.27%. That's up 4 basis points. Moving the markets, we still have Autodesk. It's a design software maker, up 4%. The Wall Street Journal reporting that activist investor Starboard Value, it's taken a $500 million stake in the company. And then as far as earnings, pretty light week. We have home builder Lennar reporting after the close today. Their shares, little change ahead of that report. We'll also hear from Lazy Boy today. And then looking further down the road, we have Kroger Thursday, CarMax on Friday. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. From the Interactive Brokers Studios, and thank you, Interactive Brokers, for your support. Paul, we're making jokes about the pool, but this is time for our annual conversation about cut and chiseled guys like you at the beach, and all of a sudden you're moving out to sea. That happened to you recently, right?
Moving out?
The riptide thing?
Oh, yeah, sure. You got to be careful.
What is that like? Describe that.
Well, the riptides, at least in the Jersey Shore, they're real, and they just kind of take you out to sea. And so what the lifeguards tell you is don't fight it. Don't try to swim back in because you'll just exhaust yourself.
So what do you do?
You swim out to one of the sides. You get out of the rip current. You swim. Either you just lie on your back and let it take you out until it's done, then you swim back in, or you swim to the sides and get out of the riptide and then swim back in. So we had one of those, a little bit of a rescue yesterday at the Jersey Shore. Some folks got caught in that. And the water was cold. Lisa Mateo came to the Jersey Shore on Saturday, She brought
She
the
brought
coldest
Nauset
water.
Beach.
She brought the
It was
coldest water
freezing.
of like the last month. It was
Yeah.
beautiful until Lisa got
Cape
there.
Cod's like that. Orleans. Nauset Beach
she
at
brought
Orleans
Cape
is
Cod.
like that.
She
You
brought
know.
Cape Cod water.
Everybody's it's July 28th, and everybody's out of the water because it's 56 degrees. Why don't you get started with Jeff Kleintop with Charles Schwab?
Yeah, he knows what's going on. Jeff Kleintop joins us, Tom. He's the chief global investment strategist at Charles Schwab. Jeff, as much as I try to avoid this whole thing, it is an election year, and I'm wondering, how are you suggesting to your Schwab clients that they navigate their investments, the markets, in an election year?
The elections around the world have been probably the top risk we've been citing all year, from Taiwan's election at the start of the year. Of course, we had India, Mexico. We've got the election coming up in France, UK elections. Obviously, I think there's one in November too. I'm not too sure about that. But there's a lot going on. And the risk is that what we see is a shift towards more populism. And that's risk to trade and inflation. These are two things that are really important right now, because 25% of the world's economies were in a recession last year, including the Eurozone and the UK. Economies very sensitive to manufacturing and trade, right? Germany is just one big automaker, right? Very sensitive to those things. And they're in recovery mode right now. So there's a risk to reversing some of those gains. If manufacturing exports look like they're not going to be happening because of all these trade barriers going up around the world, or that inflation is going to be rising again on widespread tariffs, those are all risks to the market, the top risks to the market this year. So I'm really focused on that, even though we are still in the camp that we do expect to see a broadening recovery in the manufacturing sector in the second half of the year.
So, Jeff, again, election year, so we're going to hear a lot about budgets and budget deficits and deficits as a percentage of GDP. To be honest with you, I've been doing this a long time, and I've heard this every year, but nobody seems to care. Is there going to come a time when people will care, markets will care?
Well, suddenly they care in France. It's when you take a look at what's happened there with regard to this election prospects and the concerns that the National Rally Party is simply going to blow out the budget with some of their spending plans, everything from cutting the VAT tax to taking a look at some additional spending, maybe even some taxes. There's a lot of expensive proposals there, and of course the concern is that it would already budget deficit to something even wider than that. It's something like maybe Le Penomics is going to look a bit like Trussonomics, if you recall UK Prime Minister Liz Truss's unfunded spending plans. So it did start to matter in France, and I think we might see it begin to matter as we look around the world, getting closer to some of these other elections, that markets push back out there.
A little bit of audio problems. We're going to try one more question with Jeff Kleintop this morning. Jeff, a good 10 years ago, the market stopped for market evolution, how to profit in today's changing financial markets. And you made real clear dividends matter. It was really quite something when you said that years ago. Is that what we're seeing now? We're back to old school dividends, dividend growth, free cash flow, and 10-to-1 stock splits?
I am a big fan of this. I think if you take a look at the environment that we're in now, it's the market is rewarding factors like low price to cash flow, meaning companies that have a lot of cash flow and are able to return that to shareholders are performing the best and have been since the bear market low back in October of 2022. And one market I can point to that really stands out is Japan. Companies there have been hoarding cash for a long time. They're now starting to return them to shareholders in terms of dividends and share buybacks, in partly because they've been mandated to do so by the Tokyo Stock Exchange. But that's really been a big plus for the Japan stock market. If they could just get the yen to stabilize, we'd really see some strong outperformance there.
Jeffrey Kleintop, Charles Schwab, thank you so much. And look for a redo of market evolution. That would be valuable. Red and green on the screen. Paul, the market this morning has just been like a rock churning. And it's just waiting. You were right. I missed it. Retail sales tomorrow.
Yeah, so we'll get a good view on the consumer, Tom.
Yeah,
we've heard from some of the retail companies that reported a couple of weeks ago that the numbers were coming in okay, but they remain cautious here. A lot of folks out there are really still feeling the impacts of inflation.
So you should see the pool in his backyard. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Donald Trump will meet today with House Speaker Mike Johnson at his Mar-a-Lago resort. Terry Haynes, Pangea policy founder, says Trump has to deal with some issues.
Trump's major problems are twofold. The Republican Party is split, as you can see from the Haley votes in the primaries, and Trump courting Haley, which legitimizes my point, and that he's not doing that great against or with independents. He needs to do both: consolidate the Republican Party, appeal to more independents in order to have a good chance to win. So he's going to have to calibrate himself in that way and not worry too much about making Biden jumpy or feel worse.
Pangea policy founder Terry Haynes spoke to Bloomberg. Meanwhile, President Joe Biden's reelection campaign is kicking off a $50 million June advertising blitz targeting minority voters in battleground states. Israeli officials say Prime Minister Benjamin Netanyahu has dissolved the influential war cabinet that was tasked with steering the war in Gaza. It comes as the Israeli military says it is pausing fighting during daytime hours along a key route in southern Gaza to free up a backlog of humanitarian aid deliveries for desperate Palestinians. A peace conference to set a path to end the war in Ukraine wrapped up yesterday with 80 countries jointly calling for any peace agreement between Russia and Ukraine to uphold Ukraine's territorial integrity. Russia was not invited to the conference in Switzerland. In a speech at the conference, EU Commission President Ursula von der Leyen said Russian President Vladimir Putin is making outrageous demands for peace.
Putin is not serious about ending the war. He's insisting on capitulation. He's insisting on ceding Ukrainian territory, even territory that today is not occupied by him.
The EU's Ursula von der Leyen. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Your movie report right now, Michael Barr, thanks so much. Kevin Neer, Geetha Ranganathan Publishing.
Yep.
Just recently, moments ago, box office recovery flips is delays create barren first half.
Mm-hmm.
You were way out front on this. I mean, have we lost our habit, Paul, of going to the movie theaters even with the success this weekend?
I think a lot of people have. And, just simply, I think the pandemic just accelerated what was a trend of you're getting more and better stuff just in your home on all these streaming services. So what would make you go to a theater? And what makes you go to a theater is something that you can only get in the theater that really compels you to get out of your house. And so that's kind of where Hollywood is right now. They're trying to keep the really good stuff, the big tentpole stuff, in the theaters first, and then coming to your streaming services.
But the movies still cost $100 million. I mean, the big ones, right?
They certainly do.
They're still spending the same amount of money.
Yeah, and so when you're in the movie business, Tom, it's all about the windows. Selling your movie to different windows. First the theater, then to, whether it's a Betamax or a CD or whatever, and then it's into HBO, and then it's into, Turner movies or something like that, and then it's into broadcast, window after window after window, generating more and more revenue streams off the same content. You got fewer windows these days because a lot of stuff just goes right to streaming first off.
Well, we're going to have to see. We're waiting for Paramount. We'll talk to Lucas Shaw about that. Can't say enough about the newsletters. We've got just a number. Greg Giroux to join us in the next half hour is exquisite. County by county, state by state, the politics of this nation with Greg Giroux. Lucas Shaw on entertainment as well. Mark Gurman on Apple. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen with Dow futures leading the losses down 0.2%, 93 points. We have S&P futures down 0.1%, and we have Nasdaq futures. They're a little changed, up about 5 points. Over to the bond market, we have the 2-year yield 4.73%. That's up 2 basis points. The yield on the 10-year 4.27%, and that's up 5 basis points. Shares of American Airlines down 0.5%. The carrier, its flight attendants union, they're planning another bargaining session. Takes place tomorrow. And then over to Tesla. Sources saying it's been granted approval to test its advanced driver assistance system on some streets in Shanghai. Their shares down about 0.5% because there's also that report from Electric that says Cybertruck deliveries have been delayed. And since we're talking EVs, Bloomberg reporting a $25,000 EV in the U.S. is not far off. The most affordable EV now is the electric version of the Chevy Equinox. When you consider tax credits, base model, it's going to run you about $28,000. We're getting there. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Best Father's Day wasn't mine. Dogs hugged me. Kids wouldn't talk to me. Vet bill saved it. Kennel fee, too. Lots of love. Bennett was around. Bennett's dad had the best holiday.
Okay.
Yeah, Father's Day was great.
Good.
First one, kid behaved. No teething. I explained to them it's all downhill from here.
Exactly.
Father's Day when they're 50s. Yeah, whatever.
Yep.
Yeah, see you. Bye.
I heard from 3 out of the 4, so that's not a bad.
That's a better ratio than I had. So you're killing it. But happy Father's Day to everybody, led by Bennett. Bennett's dad killed himself putting together incredibly strong people about this disinflation predicted. Stephen Major has led on this at HSBC, vigilant about a low-rate regime with HSBC Hong Kong. Stephen Major, are we finally to the low-rate regime you've been predicting?
We've had to be very patient, Tom. It seems to be coming through, and I think the catalyst was obviously not predicted by anyone. It seems to be the elections, maybe in France and Mexico. They have one thing in common. They both bring chaos and concerns on the fiscal front, and bonds don't like it in those countries. And that feeds into the safe havens like treasuries and bonds. And so I think that's helping, and it's taking the focus a bit away from every data release in the US and every Fed speaker.
Do you, as a grizzled veteran, do you get any value from monitoring the credit default swap market, or is it just too illiquid where Steve Major stays looking at full faith and credit bond market data?
Yeah, it might give us a clue on sentiment and direction, but no one's going to default here. So the French spreads moved a bit, but the more interesting one, so the French CDS has moved, but the one that's more interesting is the comparison between bunds and OATs, say in the 5-year segment. So I think CDS gives us some sort of warning, but I don't think it's particularly liquid. And I think you get much more value looking at the proper government bonds and their asset swap spreads.
So, Stephen, I'm kind of lazy enough to just say, I think I'm just going to sit around in his U.S. 2-year Treasury and get 4.75%. But you're the global head of fixed income at HSBC. You got anything more exciting for me than just the U.S. Treasury?
I don't think you're wrong on the 2 years. You might want to go a bit longer. The way I explain it to people is sort of simple opportunity cost. And to make it really simple, if you roll bills for 1 year, you can get 5.25 to 5.5. But you see, if they're cutting rates, you won't get that in a year's time. So locking in for 2 years at 470-ish seems like a good trade. Elsewhere, globally, I think you can find some of the emerging markets are looking quite interesting. India has been resilient in all of this recent volatility, because when volatility goes up, spreads go out. But India is not really a spread market; it's on its own. So there's something to say there, and I think in Europe, there's still value to be had in government bonds, but you've got to keep away from the hotspots. So it's more like Spain, for example, that's attractive, and again, Germany is the one that wins in this situation. But I know that 4.7 doesn't sound very exciting, and you're looking for some more sex, drugs, and rock and roll. But in the bond market, I'm afraid it's supposed to be boring.
Exactly. How about credit risk? If I want to take a little bit of credit risk, where do you see some opportunity out there? I know a lot of folks are telling me spreads are so tight.
You've got to get defensive, and we're shortening in terms of spread duration. And what that means in plain English is we'll go to the front end. We can take some sort of more defensive trades. Some of those haven't gone very well recently because it tends to push you into banks, and banks don't like some of the stuff going on. So high yield is okay at the front end, but you get your duration from the right place, the treasury market.
Steve Major, how do we flip from our focus on short duration and move out to the belly of the curve and even out farther? What is the exercise or the process where mere mortals decide to have the confidence to buy longer?
Yeah, I mean, I have to say, hand on heart, it's very difficult to give a strong guarantee about buying 10 years or longer in terms of the term premium. So that's part of the problem, because you know what the scenarios are around the election. A lot of the risks are known. At least if you're buying the 2s to the 5s, you should be okay, because the yield to maturity there is really driven by the policy rate and the expectations for that policy rate in the near term. Now, there's not much that either candidate's going to do to affect where Fed funds is going to be in 1 year's time. They might have an impact in 5 to 10 years' time. And that's why it starts to spill into the term premium. I think there's already a fair bit of term premium there.
Right.
I mean, everyone on the call, everyone who's listening to this knows there's a lot of debt, right? Everyone knows what the likely policies are going to be of either candidate. So it's not like it was in 2016.
Steve, it's time now, and we got to do this. It's time for our obligatory soccer talk. I'm looking at Italy, and they snuck by. It wasn't Montenegro, it was Albania.
Yeah.
And England snuck by Serbia. But I'm looking at there's some like real games coming up, like Netherlands, Austria, France, Poland. Like some of these brackets are interesting. Does England have the easiest bracket since time began?
No, there's no easy games. And I think that the first challenge is get out of your group. And in tournament football or tournament sports even, you have to play your way into the tournament. This thing is 4 weeks or so long. So it's best not to start too well. I would have thought that Germany and Spain would be worried about how well they play. I mean, save your best game to the final. And I think England did a good job of starting in a very average way.
Like Tottenham. Very good. Steve Major, thank you so much. The Tottenham strategy to football. Let's be average and win.
So this is what? This is the Euros?
I can't keep up.
I can't keep up. I mean, but I will pay attention because I do like it when the countries
we have interview notes. Okay,
Yes.
like Anthony Cosenzi, talk about his damn pool in Staten Island.
Yep.
Steve Major, you have to talk about West Ham football or whatever England's doing. We should say thank you. Steve Major, thank you so much with HSBC. You were driving, it was brilliant on a path to lower rates. But, you got to have obligatory soccer talk at least once in the show.
Well, I think, I'm just looking at Thursday, Italy, Spain.
Spain's a big one.
To that.
Yeah, that's like
I'll
a
pay
big
attention
game.
to that.
That's a big game.
All right, we need to get
Italy
Pharaoh.
didn't
Let's
win a
get
couple
Pharaoh in
years
here
ago.
just to give us a break.
Yeah, we get Pharaoh. We got to get him in here because they clobbered Albania. I thought it was tense.
I mean, Friday, Netherlands, France. I mean, that gets my attention. But I need John Pharaoh to give me the breakdown.
Albania scored in the first minute.
Okay.
How do you do that? It's like you get the face off at hockey and the goalie's looking at the girls in section 3 and you put the puck by him.
Yep, but Italy came back. Okay.
I don't know. We should. Can you make a note? Bob? Can you talk to Pharaoh's people and see if we can get them for 4 or 5 minutes, sometime before July 1st?
We need to figure out why we're watching this Euro thing.
Yeah, I mean, we need a Euro brief here.
Yes.
But you nailed it. The big game is Spain-Italy.
Yeah, I think so.
I'll watch that.
I'll definitely watch that one.
Yeah, it's very exciting. Red and green in the screen air market, churning the VIX 13.09. Bloomberg surveillance.
times and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. How are the markets going to kick things off? We have a shortened trading week as far as economic data. Retail sales not out till tomorrow. We also have those thoughts that policymakers will be in no rush to cut interest rates. We had over the weekend, the Fed's Neil Kashkari told CBS the central bank can take its time. We're off and running, so let's get right to it right now. We'll start with the S&P 500. It is a little changed, down about 0.1%, down 4 points at 5,426. We have the Dow down 0.3%, 137 points at 38,456. Then we have the NASDAQ. It's little changed, up 10 points, and we have it at 17,699. There you go. The 2-year yield, 4.74%. That's up 3 basis points. The yield on the 10-year, 4.28%, and that's up 5 basis points. We'll check in with commodities. We have spot gold lower at $2,324 an ounce. We have Brent crude, $83 a barrel. WTI crude, $79 a barrel. At the open, also want to check in with Broadcom. Their shares, well, they're up about 3%. That is your Bloomberg opening bell report. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. If you read economics, and particularly the economic persuasion of the United Kingdom, there's like a triangle that doesn't do justice to the depth. It's Oxford, Cambridge, and a school in London called London School of Economics. One of the jewels is Birkbeck. And after this third book that you read, Paul, out of a professor from Birkbeck, you go, well, this is different. Audrey Child Freeman with us, with one of the coolest sequences of parchment known to mankind, chief G10 FX strategist with Bloomberg Intelligence. Audrey, what I loved about Birkbeck was the philosophy, the economic epistemology of it as well. What was it like doing economics at Birkbeck? It was really unconventional, wasn't it?
It was brilliant. Actually, the great thing about it is that I was doing this while working. I was already in the financial industry and working, so I had both the theoretical aspect and the practical aspect at the same time. So that was very good.
It's just an extraordinary, I can't say enough about it, just the oddest school and just wonderful as well. Audrey Child Freeman, this is an odd market hinged around geopolitics. When the geopolitics is fixed, and let's be optimistic and say these will be constructive outcomes, what will the dynamics do? What will Euro do to start there?
When this is fixed, we go back into the fundamental analysis and we go back to where we were, if you remember, just after the ECB delivered a hawkish rate cut. You may remember that feels like a long time ago. And the euro was pushing towards 109 and higher because that was happening at a time when the US news flow was starting to soften. So finally, the kind of respective growth differential that continues to be at the advantage of the US was at least narrowing. And that was giving us the theme for the second half of the year. And of course, you know, since then we had the European election and the subsequent decision to have French election. And that's bringing us big element of uncertainty. And it means that we have to forget about the macro for now.
All right, so let's forget about the macro. It's politics and some other geo issues out there. How much downside do you think there could be for the euro vis-a-vis the dollar?
Well, I think, ironically, I think we already have had the first wave of euro-dollar weakness. And it hasn't, you know, given the news flow we've had, it hasn't been that dramatic. Yeah. You know, we're trading above 107 this morning. On some of the other crosses like Euro Swiss and Euro Sterling in particular, we've seen, you know, probably more significant moves. And that kind of makes sense because those crosses take away the kind of Fed narrative out of the equation. So it's more of a purely political play. But yeah, going back to euro dollar, you know, last week I was kind of surprised that we didn't even break through the 106.50, which was the low for this year. But I would say that if you're a euro bull, what came to the rescue is two things. First of all, on the US side of the equation, the news flow has continued to soften. So, you know, again, if it wasn't for the French situation, we'd probably be trading through 110. So that, I think that kind of put a floor for now. on euro dollar. And then this morning, for instance, I think the reason why euro is bouncing a little bit against the dollar is that we had, Le Pen coming out and sending some kind of trying to be reassuring and saying there will be a cohabitation, institutions will work, and the kind of headlines we've had over the weekend from France trying to reassure the market as to what they would do if they came in. So I kind of feel a little bit like, at least the market questioning, could we be going towards a Meloni type situation?
Audrey Child-Friedman with us, as you can tell, from France and Montpellier. Audrey, I've got to digress here into the geopolitics and the domestic politics of the moment of the Fifth Republic. Please explain for our American audience, Audrey, coast to coast, the weighting, the importance, the nuance that you see of the first vote versus the, I believe, July 7th second vote coming up in France. Do you look at them as two separate and discrete votes, or are they correlated and combined?
So, I mean, the first vote, you still have a wide range of, scenario potentially happening. But then we keep in the second vote for each circumscription, you keep the top two performer. So, if you look at the opinion polls at the moment, La Renaissance is third. So at the moment, and again, to be taken with a pinch of salt. But right now, if you look at the polls, you see that the national rally, so the far right, the right together, as well are on the top, and then the second is the combined left. So that includes La France Insoumise from Mélenchon, and that's quite extreme as well. So you can potentially with choose between two extremes. That's the kind of narrative that some people are worried about.
Does the narrative that people protest on the first vote and then vote more typically American on the second vote?
That's what has happened in the past when you had situation where, the National Front or the National Rassemblement National made it to the second round. But I think this time around, there's more uncertainty as to whether that could happen again. And that's why the market, a week ago was kind of panicky, and why also I would expect the spreads between the French government bond market and the German bond market to stay wide and to capture that risk scenario that we have.
That's the single best explanation I've heard, Paul, in that the first vote, I believe June 30, they go mental and they protest and whatever, and then they go, okay, that's over. And the second vote is very much like what we see the dynamics in America.
Let's get down to business. Yeah. All right, so Audrey, again, elections all around the world here. I'm guessing the U.S. election is going to trump them all here. How are currency traders trying to position themselves here ahead of the U.S. election?
So again, great uncertainty as to who will be the U.S. president after the November 5th election. And then even if you take the scenario, let's focus on a potential Trump presidency, second Trump presidency, there's uncertainty as to whether, it's bullish for the dollar or bearish for the dollar. Like not so long ago, we were all kind of jumping into the conclusion that, if we see an increase in tariff, the U.S. economy is better, is more insulated, and it's more closed economy than Europe or China. So, it is dollar bullish from a short-term cyclical perspective. But then, you heard some comments about, Fed independence and trying to influence the Fed as to how much rate cuts we should see next year. And then, how will a Trump potentially, how would a Trump 2 presidency, impact the de-dollarization story? So there's a lot of unknown coming into the equation again. So you have to be very humble, I think, in that respect. For me, it's probably even more difficult to read, the impacts that we'll have and for how long. Probably go from one narrative to the other, and in the end, you have no impacts like he did with Trump 1.
Audrey, got to go. This was brilliant. Thank you so much. Audrey Child-Friedman on foreign exchange with Bloomberg Intelligence. Market open for trading, red and green on the screen. NASDAQ up, won't go down, green on the screen. Ever so fractional. with our news in New York City. Here's Michael Barr.
Thank you very much, Tom. Paul, Lisa. Israel announced a tactical pause and the reopening of the Kerem Shalom crossing for humanitarian aid into Gaza. Deliveries will happen during an 11-hour window daily. The IDF will be present at the border crossing, but it wasn't immediately clear what role the Israeli army would play. IDF spokesman Daniel Hagari said the blame with humanitarian aid lies with Hamas.
We want to find a solution together with the UN, with the international organization, but we won't have Hamas having the control.
Meanwhile, Israeli officials say that Prime Minister Benjamin Netanyahu has dissolved the war cabinet after a key partner bolted the government. Opposition lawmaker Benny Gantz left the coalition last week. A week and a half before the first presidential debate, former President Donald Trump meets today with the House Speaker, Mike Johnson, at Trump's resort in Mar-a-Lago. Congressional Republicans are looking at how to hold on to the slim majority they have in the House. Bloomberg's Laura Davidson.
It's born out of concern, both for, knowing, making sure that they're all on the same page on what they want, and also born out of concern that, they may lose their House majority next year. They have just a couple seats. There's some districts in the New York City area as well as LA that Democrats are well poised to win. So this is sort of a planning session of how do we keep, this various tenuous majority, perhaps grow it, but even just hold on to what we have going forward.
Bloomberg's Laura Davison. Maryland Governor Wes Moore is scheduled to sign an executive order to issue more than 175,000 pardons for marijuana convictions. The Washington Post reports the order to be unveiled today will forgive low-level marijuana possession charges for an estimated 100,000 people. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Yeah, I should point out that the Red Sox took the series from Philadelphia and took the series from the Yankees. This is the only good news I have for the last 6 months. Tomorrow night at Yankee Stadium, the Baltimore Orioles play the New York Yankees. Arguably, good morning, Los Angeles, the two best teams in baseball. I mean, the Yankees, 50 games already.
Yeah. And speaking of Los Angeles, bad news, Mookie Betts got a broken hand.
Right.
And he's going to be out for a while.
Yep.
But back to what you were talking about, yes, this is going to be a heck of a series.
And, I'm thinking the surveillance box that we have.
Sure.
It'd be great. Lisa there.
We might know some people on the Orioles front as well. We'll have to check on that.
Let's check on that.
Yeah.
Baltimore, New York.
Yep.
Like the two best teams in baseball, some would say.
Yeah, I mean, the Yankees are just winning, and then you
It's
look
the
at
way
the box
they're doing
score,
it.
and they're like, oh, we're only up a couple of games on the Orioles, and you're like, yeah. I thought we would have.
But it's the
10.
way they're winning. They're
Yeah.
winning like, they just show up and good things happen.
Yeah, you're right. They're looking magnificent. By the way, what was the there was a chance for, I forgot my man's name, but pitching against the Tigers, he was hitless through 7.
Yeah,
and they
pulled him.
Yeah, and they had to pull him, and because the pitch count was too high. So what you've talked about.
Yeah. Verlander's very articulate about that. Verlander used to be with the Detroit Tigers.
Yep.
And then he's like, he wants them to pitch more innings, but they're all pitch count. It's like we are. If we have, we have syllables. They keep track of how many syllables we say.
Exactly.
And, that's why you go.
No, so the Yankees and the O's. I mean, that's big. For
big
baseball
series.
fans. Yeah, exactly. Right.
Sarah emails in. Thank you, Sarah. With Team Surveillance in Washington.
I didn't know she was a fan.
Thank you. She's in the control room.
Yep.
Go
O's. She's the boss.
She didn't like the O's until like 12 weeks ago. Were you at the game?
She was
very good.
Look at her.
Sarah was at the game at Camden. Wow.
There we go.
Lisa's at the beach.
Yep.
Sarah's in Camden.
Everybody's
you and
living
I
their
have no
fullest
life.
Tom. I mean, everybody's living their fullest life.
Somebody asked me about Michael Barr if I was joking. No, he's got this gunite pool in the backyard. The Detroit Lions logo in it. It is outstanding. Red and green on the screen right now. NASDAQ up fractionally. The VIX 13.18. Yields higher, dollar stronger. From New York, Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen right now. Dow leading the losses, down about 0.1%, but we have the NASDAQ and S&P 500 are little changed. The 2-year yield, 4.75%. That's up 4 basis points. The yield on the 10-year, 4.29%. That's up 6 basis points. Want to check in with shares of Nvidia. They're up another about 0.5% right now. It's recent 10-for-1 stock split, keeping that rally going. Then you have home builder Lennar opening its books after the close today. Its shares right now down about 0.3%. And Monster Beverage, those shares higher about 1.5%, up 1.5%. The stock's been falling over worries of slowing growth in U.S. energy drink sales. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Greatly appreciate it. We've been talking about the newsletters of Bloomberg. Mark Gurman on Apple, Lucas Shaw on entertainment. Do you read that, Paul?
I do.
I mean, you're so up to speed. Maybe you don't
really
need to
locked
read
in.
it, but
He's really locked in.
I love it. He's got a huge event coming up out in Los Angeles. Yep. Does Greg Giroux do an event?
I
don't think he does.
He just roams the country.
He's so large.
District to district to district.
And he
all
does.
Over the country. I don't know what he does.
It says he's a reporter with Bloomberg Government.
Yeah,
what you need to know, folks, is there's a very short list of 2 or 3 names in Washington that own the granularity of this election. Greg Giroux, thank you for being on. We really hope to see you here through November and the outcome past November. What's the granularity you're focused on right now?
We're pretty deep in primary season right now, Tom, where the Democrats and the Republicans are, picking their nominees for the key seats in the November 5th general election. We've got primaries every Tuesday in May and June, so a very busy stretch. We've got a big, some very really internecine warfare primaries and Republican primaries, but also some vigorous Democratic primaries, including one next week in New York with Jamal Bowman and George Latimer in Westchester and parts of the Bronx. So we're sort of in that very busy period of primaries, a little bit of a lull in July for elections, and then another big boost of primaries in August. And then before you know it, it's Labor Day and then the big sprint to the November election.
Greg, in some of these Republican primaries, is it a Trump candidate versus a more traditional conservative Republican candidate? Are things lining up there?
Well, sometimes, but not always. We've got one tomorrow in Virginia's 5th district in the South Side, south of Washington, D.C. That goes all the way to the North Carolina border, where you have 2 very conservative Republicans running, including the incumbent, Bob Good, who's the head of the Freedom Caucus, which is a bloc of very conservative Republicans who tend to resist bipartisan policy compromises that Republicans like Kevin McCarthy hatched with Joe Biden. Trump is actually backing his challenger, even though Bob Good is very conservative, and that challenger is a state senator named John McGuire. And I think a big reason for that is that Bob Good endorsed Ron DeSantis for president before Donald Trump. Trump, of course, is someone who, certainly wants and commands loyalty in Republican ranks, and he's intervened in that primary more than some others where he's issued some endorsements of candidates.
By and large, Greg, does former President Trump's popularity and support, does that filter down into some of these local races? Is that pretty much a given?
Yeah, I mean, no one dominates, I think, a Republican primary electorate like Trump. He doesn't have a perfect record of endorsements in Republican primaries, but where he tends to intervene pretty heavily, including this Virginia primary, he tends to win. And, candidates who they certainly seek out his endorsements, and he still has a very high approval rating within the Republican rank and file, and that just buys a lot of media attention and support for candidates who have his imprimatur.
Greg Giroux, in the French elections, there's a huge mystery to how the middle, to the right lefts, to the left rights, and the Macron people in the middle act. Do you have, with your granularity, an understanding of the middle of America?
Well, it's a very good question because we seem to be very polarized. That certainly in the Congress, the kind of the broad ideological middle is sort of shrunk. We don't really have too many moderate to liberal Republicans like we did in much of the Northeast and in New York, like a Jacob Javits or a John Chafee, and we don't really have too many conservative, or moderate. Conservative, to moderate Democrats in the House that was personified by what was known as the Blue Dog Coalition, and only 5 of them left in the House. So we don't really have a broad middle in the Congress. As far as the country, though, I think there certainly is. Maybe it's a block of 10 to 15% of the people that's kind of a true swing electorate. I don't know that they're really concentrated in one area of the country or not. I think they're kind of spotted all around. But certainly you want to look at areas like Bucks County, Pennsylvania, traditional swing area, or Macomb County, Michigan.
Okay, so what do you see outside Philadelphia?
Well, outside Philadelphia, I see Bucks County, for example, is a swing area. We've got the Lehigh Valley is definitely a place to watch. And, I think one kind of area that's going to be a center of American politics the next 4.5 months will be Scranton, Pennsylvania, where you have a swing House race that'll determine the House majority. Pennsylvania has a Senate seat that's going to determine the Senate majority, or at least help do so. And then Pennsylvania will be a swing state in the presidential election.
So, Greg, on the Democratic side, in some of these primaries, what are kind of the issues here? What are we learning from some of these Democratic primaries?
Yeah, we haven't had too many of the fractious Democratic primaries that we've seen on the Republican side, although we do have one, as I mentioned, in New York a week from tomorrow, Jamal Bowman versus George Latimer. That has really underscored some tensions within the party over the Israel-Hamas conflict and U.S. foreign policy in the Middle East more generally, although the groups that have been spending a lot of money in that race are not really contesting the race over those issues. Jamal Bowman, the incumbent, is being attacked over some votes against some Biden administration initiatives like the infrastructure package or a debt limit deal. So it's more about being more of a team player, I think, is the attack there. Israel policy has come up, but it's more about, are you a team player for the Biden administration? That's what I think some of the more far left Democrats are hearing from their primary challengers, who are from more the center left.
Greg Giroux from Bloomberg Government. Don't be a stranger as the season heats up, to say the least. Finally, Paul, you and I have been talking about this. I've been looking like a fool. Home Depot with a $10 billion-ish debt sale happening right now. Bloomberg reporting on it. Thank you, Olivier Raymond and Jojana Joshua, for the brief. And then there's a whole bunch else. Yields have come in.
Yeah.
Just in the last couple of days.
Sure.
And there's somebody saying modeling $30 billion this week. And, what is a tech guy's going to do?
Yeah. I mean, look at this Home Depot deal. It's going to be in 9 different parts. Monster deal. You've got Bank of America, Goldman Sachs, JP Morgan, and Morgan Stanley leading the deal here. So you're right, Tom. Yields have come in a little bit. The markets are open. We've heard that from bankers all year. When you do get a pullback in rates, the market, particularly the investment grade market, is just wide open. Let's come to market. It's not just the banks. Now we're getting a big
I've said this
retailer.
all year and I've been wrong, but I wonder when, with a vengeance, we get some debt from some of these big players.
Yeah, I'm looking at the reporting here from Bloomberg First Word. They're going to get maybe a dozen issuers just today. Coming into the marketplace. So I guess people coming back into the office. Let's get to work here.
This has been a most interesting Monday. It's a really rich discussion of economics, finance, investment, and I guess we got to say geopolitics as well. We're looking towards the French vote. I'm trying to get you and me in Paris.
Yep, we're working on that.
We're working on that.
Yep.
We'll see. We're going to try. Problem is, there's 2 votes.
To Bob back there.
We want to go for 10 days. We want to get both votes. So June 30 and July 7. And, we could be there for the 4th of July.
Yeah, I know.
They were on our side.
Big vote there. Yeah,
remember that.
Exactly. They were on our side. That's right.
Something like that. We're working on it, folks. We'll see. Team coverage from Paris would be good. The Olympics, I don't think so. But
it might be a little tough for the hotel rooms, I guess, at that.
A little tough?
Yeah.
I'll
stay with Sam Fazeli down in the south.
Say the least. But we say thank you to all for a really interesting Monday. Thank you out on YouTube. Just thrilled with the coverage and your interest in YouTube live chat. Seriously, it's summer in the city, but I'll tell you, folks, the heat, it's going to be real. Stay cool. Good morning.
Different world. a bus stop, running up the stairs, gonna meet you on the rooftop.